closest starts to end up on the brink. I tried so hard, but
Time now for a return to work update. New York Governor Kathy Hochul has lifted the mask mandate for New York City's public transit. That brings the MTA in line with other transportation systems that relaxed their rules back in April. And separately, Amazon CEO Andy Jassy says that the company does not plan to order corporate employees to return to the office. Speaking at the Code conference, Jassy says most employees have returned to physical offices and are spending some days working from home. He also said that Amazon is now more open to remote work and will be recruiting employees from any location, not just areas where it has a large presence.
So if you, I have to come in from New Jersey, so I never take mass transit. There's been a mask requirement on the subways until yesterday.
Probably the least of their issues
and
when
buses,
you consider what's
right?
happening.
And everybody else stopped in April.
Yeah.
And it's September.
Yep.
Let's get to the guest.
Our next guest, in fact, says mandating workers to return to the office 3 days a week is lazy when it comes to a business approach. Let's welcome Ravi Kumar. He's president of information technology company Infosys. And Ravi, what do you mean when you say it's a lazy approach? You'd like to see everybody back all the time, or you think there should be a lot more flexibility?
Thank you, Becky. Thank you for that opportunity to talk to you. Infosys, as you know, is a global tech and digital services firm with 300,000 employees distributed globally. What I meant by a lazy approach is to create a homogeneous approach to any kind of work, any industry, to come back to work for 3 days. We went from 5 days to work to 0 days to work. That doesn't mean hybrid work means we should get to 3 days a week. And that's because the original template before the pre-pandemic was an evolved template from the Industrial Revolution, which was a flawed template. It was a flawed template because it kind of said every industry, any kind of work should be in a physical workplace for 5 days. I think that template is out of the window. We should start to look at work being very heterogeneous, work being very distributed. Workplaces and workforce are going to be decoupled. And as they get decoupled, depending on the type of the industry, the type of work, the type of function, you could either be 5 days at work or you could be no days at work. Productivity is not at odds with flexibility. Productivity can actually be reinforced with flexibility. At some point of time, we had fun at work reinforce productivity. We will now have flexibility reinforce productivity. And that is real. And to me, that is going to define what the future of work is. Workplaces and workforce are going to be decoupled. You could actually create much more productivity by being flexible in some kinds of work. And we should therefore not paint a broad brush and get people to work for 3 days a week. We should probably be more deliberate about what we do.
Doesn't your business flourish when no one goes back to work, Ravi?
You know what? We have 300,000 employees across the world. We have been working hybrid, remote.
Right.
It's
So
not impacted us.
Of course you're happy about. Of course you're happy about this. And I mean, how about kids that are in school that haven't been in school in 2 or 3 years? We don't even know where to start to try to get them back into a normal path.
So the point,
that doesn't apply at all to people in the workforce.
So the point I'm making is it's going to physical workplaces is real and needed as well. It helps on spontaneous creativity, it helps on spontaneous innovation, collaboration, and the ability to actually create more learning. What I'm actually saying is the workplace is very heterogeneous, which essentially means there will be some work which will need you to be 5 days at work. Yeah. There will be some kinds of work which doesn't need you to be at work.
Right.
And why do you need to force people and mandate people to get to work? That's the point I'm making. And being in physical workplaces is critical. It's not, I'm not taking that away.
I think one of your interesting points that you've made is that, you think that workers have not had enough say in developing policies. And that's interesting. And that's a reaction that a lot of people have had in a very tight labor market. What happens as unemployment starts to rise? I mean, I've always had the sense that the bosses are kind of coddling people now, but they're not going to when it's a tighter labor market and they can call the shots again. They're only doing it because they have to right now.
Yeah, so Becky, I would still say that the smarter ones will continue to keep flexibility as a catalyst for productivity. Companies like Infosys have accessed more human capital during the hybrid model. We have actually moved work to where people are rather than getting people to where work is. And that's very critical. Distribution of lives, distribution of work is the new template. Let's not re-baseline to what we did before the pandemic. Let's baseline to what is real, what is needed. Some industries will need 5 days at work. Some industries will not need any days at work. Some industries will need to build social capital. All industries will need to build social capital. You need to use physical workplaces to build collaboration, to build culture, to build social capital, not to forcefully bring people to work because we believe we can at least see them around and therefore we could believe whether there is enough productivity or not. That's the point I'm making. Digital tools have made workplaces very, very virtualized and very effective and very modular. So we could really virtually work from any place, any point of time, and
Ravi,
still be productive.
Playing us out. They're playing us out. Ravi Kumar, I want to thank you for your time today. Good to see you.
Thank you.
Right, coming up, reaction to Apple's new product lineup and new comments from CEO Tim Cook. It's like my favorite thing.
Tim.
I don't miss Steve Jobs. You?
Well, I miss Steve Jobs, but Tim Cook has done amazing.
In terms of the company didn't skip a beat after we lost.
No, and
Steve
actually
Jobs.
it picked up in services and all kinds of things we never imagined.
Right. We'll be right back.
We've never said digital advertising is a bad thing. What is not good is vacuuming up people's data when they're not doing so on an informed basis. That's what is bad. And so we try to put the user in the driver's seat there to own their data.
As Apple CEO Tim Cook speaking about the impact of the company's privacy policy. Apple unveiled a variety yesterday of new products, including a new lineup of iPhones, Apple Watches, and AirPods. Joining us now is Gene Munster, Loop founder and managing partner. In this day and age, and especially this environment, Gene, we see companies that raise prices, and sometimes we like it because it maintains margins and because it indicates that their product is near and dear and the demand is inelastic. But other times we like it when companies are run so efficiently they don't have to raise prices. Which is it here? How did Apple, didn't you think they were going to raise prices and it didn't happen? Is that good or bad? Does that mean lower profit margins, or does it mean they're just that they've navigated this more successfully?
That's a great thing. They maintained margins over the past year, 43% gross margins, despite spiking costs, Joe. And I think that is an indication that they're just masters in terms of multiplying the supply chain. The maintaining of price is essentially a price cut for consumers. I think this is a really surprise. It was probably the second biggest takeaway behind the satellite phone. And I think that's one of the reasons why Apple investors can sleep well at night, is knowing that despite these spiking costs, that they can maintain margins. I was very surprised to see it. And I think it ultimately is going to drive market share. And just to put a finer point on that, Joe, is that Apple's market share globally has just been hovering around that 18% for iPhone for the past several years. I suspect that this change in pricing will probably, or the maintaining of pricing, will probably increase their market share by 1% or 2%. Might not sound like much, but when you run that through the model for the next 2 or 3 quarters, it essentially means that there can be some fractional upside to the iPhone numbers. Now, going into this, expecting a price increase, that was not my view. I was apprehensive that they could have some struggles, I think, in the back half of the year. That has been laid to rest in part, or in large part, because of this maintaining of price.
Pretty amazing. So smartphone sales were not great over the past year, except for Apple. That's the only company that was able to do it already, and that would. Some people might have applauded a price increase. It's nice when companies can add to revenue if people are going to buy the same amount. But in your view, it's a market share move and they'll pick up more than they would have gained on any incremental price increases by taking market share away.
Correct. I think that there would have been a dynamic if they did raise pricing. One side would have applauded that because of profitability. The other side would have said that is a dangerous thing to do going into the consumer mindset, going into the fall. I think they really threaded the needle here. And again, to kind of frame it in, is that they're going to pick up some share in the smartphone market with this. I suspect Samsung is going to be raising their pricing. And separately, I think they're going to be able to maintain that profitability through that. And so I think it was a big surprise for me.
So tell me about the biggest thing. The biggest thing was the satellite. So if I'm one of these people that leave at like 2 in the afternoon to go on a hike to the top of a mountain and realize, oh my God, it's dark. So you can get rescued. Is that why you want to be able to, where there's no service? Is that it?
That's how they marketed in the presentation yesterday. I mean, some pretty adventurous people, backcountry skiers. That is understandable. That's the marketing piece around it. But I think this appeals to a broader base. And even in urban areas, there can be times when we don't have cell coverage. And I think what this is really speaking to is just a sense of security. It also kind of plays in with Apple's overall broader theme, some of the commentary that you had with Tim Cook earlier in this segment here about how they think about data and privacy. They also think about just security and people's safety as one of their kind of pole tent themes. And in this case, the satellite phone, it's just more about the average person. It's not the backcountry skier, it's the average person, just that sense of, if I do get into a tough spot where there's not cell coverage, I can message my way out of it. Yep. I think that is the selling point.
Great. All right. Both important. if those are the most important things, it does sort of say, wow, there wasn't anything really else. One more thing, but you know, maybe next time. Eventually, there will be one more thing. I think, Gene.
There will, and I
got
think
a lot
it
of
will
money
be
to play with. All right, thanks, Gene. See you.
Thank you.
When we come back, Maryland Governor Larry Hogan will be here to talk inflation, student loans, and a lot more. And new UK Prime Minister Liz Truss just announcing her plan to ease the pain of high energy costs, including a cap on energy bills that she says will curb inflation by up to 5 percentage points. More details straight ahead.
For all.
Good morning. Stock futures moving higher as investors look to build on its best day in nearly a month. We'll talk about where this market is headed next and what the charts are telling us, too. Investors buzzing about Apple's new products, but is the stock a buy? We will lay out both sides of the argument. Plus, the governor of Maryland, Larry Hogan, joins us to talk inflation, student debt, and President Biden's plan to fix it. The second hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box here on CNBC, live from the NASDAQ market site in Times Square. I'm Joe Kernan along with Becky Quick. U.S. equity futures at this hour kind of flat, but flat something, maybe something to be proud of after finally a snapback to some extent yesterday after 7 straight losing sessions in the NASDAQ. Pretty good day yesterday. We're up another 10 points on the NASDAQ. Dow Jones up 38. S&P up about 4. The S&P get back to close to 4,000. We'll talk to Katie Stockton a little bit later. 39.79. Add 10 onto that. It's 39.90. Right there, right in the middle of where the bet is made, whether we go to 4,400 or 3,600. We'll get an update on that from Katie Stockton shortly. Treasuries 330 or so on the 10-year with 325, and then you can see that crude 82.45. A lot of people didn't think we'd have an 8 handle at this point, given the backdrop with OPEC and Vladimir Putin. But it is what it is. $82. It's better than 120, but still sharply higher than a couple of years ago. And then crypto bouncing a little back over 19,000 in terms of Bitcoin. There you can see Ether at just over 1,600. Let's get to Dom Chu. So look at this morning's pre-market movers. Hey, Dom.
All right, so Joe, what we've got right now is a check on where we stand with regard to certain big trades that maybe have a bearing on the rest of the markets right now. But we'll start with some of the news this morning with regard to stuff on the move in the semiconductor business. And that's because analysts over at Stifel have initiated coverage for a slate of computer chip companies. And Advanced Micro, NVIDIA, and Intel are among them. Now, Advanced Micro gets the buy rating of those three. NVIDIA and Intel get a hold rating. These are initiations. So we're going to watch those shares. They like Advanced Micro's inroads that they've made into client computing and certain parts of its data center market and everything else. So they like Advanced Micro among the three. NVIDIA and Intel, they're more positive on longer term, but they think that a little bit of near-term, medium-term dust needs to settle on their visibility into business and execution. So those shares on the hold side of things. I've just put up the VanEck Vector Semiconductor ETF ticker SMH up there just to kind of give you an idea of where things stand right now. But a lot of folks like to look towards those semiconductors as an indicator of the broader tech sector. So we'll watch those. Also, watching what's happening overall with the rest of that kind of technology trade. If you look at some of these other moves here, McCormick, by the way, the biggest laggard in the S&P 500 in the pre-market, the spice maker comes out and says that its sales and earnings in its current quarter that it's going to report are going to come in below what it thought it was going to. They cite the effects of inflation on the consumer and spending pictures out there. So McCormick shares down about 6%. And then we'll key on that mega cap technology trade. I mentioned the semiconductors, but the biggest stocks in the S&P and the NASDAQ 100 posted some solid gains yesterday, led by Microsoft, Alphabet, Amazon, and Tesla. Apple was a bit of an underperformer, up nearly 1% in yesterday's trade on the big product event for the iPhone 14. But we're seeing some fractional moves there, so we're trying to see if we can build on some of these mega cap names. And Becky, Joe, what I would say is that if you take a look at some of these stocks, they have been at least more volatile than some would have expected given the interest rate moves that we've seen. So watch mega cap technology. See, that's going to be a big thing heading into the opening bell, Becky. I'll send things back over to you.
Thank you. Our next guest says that this is the week of building global growth angst. Let's bring in Gabriela Santos. She is global market strategist at JP Morgan Asset Management. And Gabriela, when I look at it, it's, the problems that are on the horizon aren't new. They're not different than what we knew a week or two ago. Is this just everybody's back to work, back to school, kind of back in the fall, and this is when we start kind of harping on those same problems and focusing a little deeper?
So I do think we have been focusing on the risk of a global recession for a few months now. And we have seen that reflected specifically in currency markets, with the dollar continuing to rally up near 20-year highs versus several currencies. That's really where you see this flight to quality magnified. I think over the weekend, the global growth angst built up a little bit further. Europe, with regards to the energy crisis, with Russia closing the flow of natural gas through the Nord Stream 1 pipeline indefinitely, and questions building about winter in Europe and how severe a potential recession there could be, as well as some angst building in China with the extension of lockdowns in several important cities, and just the true toll that has been taking on confidence in the country, limiting any pace of reacceleration. So we continue to see a lot of this angst building in currency markets. And this certainly doesn't help the outlook when it comes to these local economies. It fuels inflation in Europe, for example, leading partly to the ECB hiking rates later this morning, we think by 75 basis points. And it certainly doesn't help the growth picture in the U.S. either, in terms of the economic picture with trade weighing on growth, or the earnings picture with a stronger dollar, we think, weighing on profits of large multinationals, which has yet to be factored in.
Gabriela, add all that up. You think stock market's going to head lower from here or stabilize?
We still think this is a very difficult moment for the stock market as we continue to grapple with these cyclical issues around the probability of a global recession, a US recession, which is very dependent on what happens overseas, as well as what happens here in the US with Fed policy. And the stock market continues to also grapple with some longer term questions coming out of the pandemic and into the next cycle. What is the real rate and what does that mean for multiples? Have we corrected them enough? And what does it mean for demand for certain sectors that saw such a huge boom during the pandemic? What's a more normalized earnings stream for those companies? So we're still grappling with some big cyclical and structural questions. And to us, that means that the stock market is still due to see quite a lot of volatility here in the fall before eventually resuming a new bull market later on. So for us, it's still a bit too early to start taking on risk. We see a lot of clients wanting to do so because we have already had a tough year and valuations have corrected. But on a broad basis, we would still be underweight stocks and high yield credit.
When you say you see trouble this fall before a bull market continues down the road, you mean later this year or you mean next year and beyond?
I mean over the difficulties, or shall we say the question marks that we need to resolve, I think we'll largely get a lot of visibility that in this fall and into the winter. We'll get more visibility as to where interest rates end up, not just at the end of this year, but into next year as well, which is the big question for these two structural and cyclical questions in the US. And we'll also get more visibility around how Europe is able to navigate the winter and how China plans to navigate COVID after their important National People's Congress on October 16th. So I do think it's a choppier fall, but setting us up for a much, much better 2023 when it comes to stock markets. I just think it's a bit too early to dial up the risk exposure right now. It's still a time to be thinking more carefully about how we take risk.
So a warning for the near future. Gabriela, thank you. We'll talk to you again soon.
Thank you.
What's wrong?
Kill this fly. There's a fly, and I can't wait till it lands close because I'm gonna kill this fly. There's a fly. Been all around, and I don't know. Is there a reason?
Is that why you were rolling up the newspaper?
Yeah, that's why I was rolling up the newspaper and twitching it at. Why is it attracted to me? Do not answer that.
Because you stink.
Yeah, coming up, Governor Larry Hogan of.
You know what flies like to eat. Oh, did you get it?
Larry Hogan of Governor Larry Hogan of Maryland on America's. I don't know. I might have. It was so slow. On America's inflation battle, the cost of higher education, and much more than later. Apple officially pulling back the curtain on a slew of new products, including its latest iPhone. But will the stock get a pop? We're going to break down that event and what investors should take away from the lineup. We'll be right back.
AlphaDayTrading.com.
All right, welcome back, everybody. We have a special guest joining us on our set this morning to talk about inflation, student debt, and more. We want to welcome Governor Larry Hogan of Maryland. And Governor, thanks for being here in person. It's actually really good to see you.
It's good to be with you both. It's better than, zooming in or.
Yeah, we're kind of sick of that too.
Right,
Yeah.
back to work.
It's great to see you guys are real and real life.
You watch us sometimes?
Sometimes. I don't have enough money. I don't have enough money to pay attention.
That was fishing for not a sometimes. I was fishing for an all the time.
Usually people with money pay attention to you every morning, and guys like me, we're focused on the other news of the day.
Okay.
Well, let's talk about some of that other news of the day. We have seen some pretty serious issues. Market's been down this year because of concerns about inflation, concerns about a downturn in the economy, lots of other issues that are going on. What do you see in your state?
Well, our state is booming, but I think the concerns are legitimate. People all across America are concerned about inflation, prices out of control. We got supply chain issues. We've got to work on our domestic energy production. So in our state, we're doing fairly well. We turned the economy around. We cut taxes 8 years in a row by $4.8 billion. We took a $5 billion deficit, turned it into a $3 billion surplus, and took our economy, overall economic performance, from 49th out of 50 states to number 6, biggest economic turnaround in America. We've got more people working, more businesses open, but you still have people struggling. People are dealing with the high cost of groceries and gasoline and worried about heating oil this winter, and so...
Have the concerns come down as gasoline prices have come down? You were one of the first governors, maybe the first governor, to actually cut the gas tax in your state when gas prices started to go up.
Yeah.
What have you done since?
So I was the first governor in America to suspend the gas tax, just because we wanted to at least let them keep a few more dollars in their pocket as they were struggling. We called on the federal government to do the same. After 6 months of bugging them, we actually got President Biden came out and said he would do it, but it went nowhere in Congress, so they've taken no action. And I got together with 24 other governors pushing the Biden administration to reverse their energy policies and allow for the Keystone XL pipeline and more domestic drilling so that we can continue to produce our own energy. I'm an all of the above energy guy.
Have you put the gas tax back on at this point?
I had to get legislative approval, and my 70% Democratic legislature did not want to extend it any further. But in the short term, when they were really high, it helped. We saved people about $150 million right off the bat, and a few other states followed us, but not many.
The reason oil prices have come down is because of concern about a real slowdown in the economy globally. Are you seeing any signs of that from where you sit? When you look at the tax receipts, when you look at what you hear from businesses, is that starting to happen? Is it still a tight labor market?
I'll take the rest of the country. I think we are seeing that. I think our state is doing better than most. We've had one of the best economic recoveries, and we're the highest median household income in America, most highly educated workforce, and so we have different issues, I think, but yes, I think people are concerned about the slowdown. They're concerned about the fact that even though we technically have zero unemployment or full unemployment, it's not really the case, because I talk to businesses every day. They're desperate to get people back to work.
What are the issues you do have? You said you have different issues?
The issues, some of the things that you're talking about a lot was, this issue with student debt that President Biden came out with, which I thought was a bad idea when we're in an inflationary period. But we've done things to try to make college more affordable. We were the first in the nation to remove a requirement for a 4-year degree for thousands of state jobs. And we've done a lot to work on apprenticeships and getting people skills that they need for the jobs of the future.
So, Governor, just since 2022 is coming up, it is 2022, but since November is coming, it's like a matter of days almost at this point. So we got that coming up, and then we have 2024 coming up. And I'm thinking about both the Democratic Party and the Republican Party and how fractured each one is. And I'm wondering, this is a democracy. I know people think they're worried about the democracy. I myself am not. I think we're going to be fine. But on the left, I think you've got a president who some people don't want to run again because they think he probably has passed the point of where he's as effective as he would have been when he was younger. On the other side, you've got a former president who may even be more powerful with his base after some recent events. And that leaves people with the prospect of a Biden-Trump rematch. in 2024.
And I think that's not something that the majority of the people in America want to see. About 70% of the people in the country would not like to see a Biden-Trump rematch, but I agree with you. We've got the current administration, President Biden, moving too far to the left, not focused on fixing some of these economic problems that we're dealing with. And then you've got, instead of the Republicans focusing on the concerns of the average hardworking American, they're talking about Mar-a-Lago and Trump and relitigating the 2020 election. And I think the average person just wants them to focus on fixing the problems and caring about them.
How do you see it playing out? How do you see it resolving itself?
It's not going to happen overnight, but I'm still hopeful that we can move in a different direction. The extremes of both parties and the most and loudest, angriest voices are the ones that get all the attention, but most people in America really want us to come together, work together, and get things done.
What do you think of this?
That's what we've done in our state.
Do you think that was I mean, Trump made some dark speeches. President Trump made some dark speeches too, I guess, former president, but that was a pretty dark speech.
I thought it was not only dark, but very political. I thought both of them gave some pretty inflammatory, speeches just in the past week or so. And it's, again, that's all we're talking about in the news is, just Trump and Biden and, crazy, angry politics, calling each other names, and instead of saying, we're going to, how about a positive, hopeful vision for where we're going to take America?
You think we're depleting the SPR is a good idea at this point? Or are we opening up our own ability to find hydrocarbons? Are we doing that enough here?
I don't think we are. No, I mean, I think I'm for expanded energy production all across America, and I think that we got to reverse the policies of Joe Biden and get back to not being so reliant on foreign countries.
Are you going to run for president, governor?
I'm going to take a look at it when I finish my term as governor next January. A lot of people have encouraged me to do so, but I haven't really made that decision. It's something I'll sit down with my family and my advisors and see if I know I want to be a voice, and I know I want to play a role in getting the country back on track, but not sure exactly what that's going to be.
If you had to pick 3 things you'd like to fix first, what would they be?
Well, I'd like to work on the economy. The other thing I'm focused on is, crime is a big issue, and education. I think those are the concerns. I mentioned, started a refund the police initiative. We're backing the blue, trying to stop the violence in our inner cities, something I've been focused on for 8 years as governor, and I think, we've turned our economy around. I think some of the things we've done in our state are exactly what we need to do with the country.
Biggest challenge you think that the country faces, though, in terms of what Joe just laid out?
I think the biggest challenge that faces the country is the toxic politics today. The fact that Washington is completely broken. There's nothing but divisiveness and dysfunction, and nothing ever gets done. And frankly, both parties are to blame. And we need serious leaders that will actually try to work together, work across the aisle. You're going to be passionate about the things that you care about, but you got to be willing to sit down and work with the other side. Otherwise, we don't get anything done. And that's what I've done in my state of Maryland as a Republican governor in the bluest state in the country, with a 70% Democratic majority in both houses of my legislature. We've still cut taxes, grown our economy, rebuilt, invested record amounts in our schools, cleaned up the Chesapeake Bay. By working together in a bipartisan, common sense way.
So nationally, what would you run on? What would it be? Tax policy? You'd run on it?
I think the things that everybody in the country is concerned about is inflation, the cost of goods, the supply chain, the economy, good jobs. Taxes are too high. Run on doing something about the crime and supporting the police. Work on making sure parents have more of a role in deciding about their kids' education. I think those are you have to run on every issue if you're running for president, but I think you do the same kinds of things. I think we've already shown a better path forward in Maryland in the most difficult environment.
Would you do anything with entitlements?
I think that you have to take a look at entitlements. I mean, I've rolled out a detailed plan about what we're going to do, but obviously that's a major issue we haven't been able to solve for decades.
Can we read your lips? No new taxes? Or?
Yeah. Well, look, I ran for governor.
You do it again?
I ran for governor because my predecessor had raised taxes 43 times in a row, and I was a small business owner that was getting crushed. And I got frustrated enough to run in a place where no one thought a Republican could win. And then I cut taxes 8 years in a row.
And you
haven't had a single tax increase in 8 years.
You'd drill more? You'd open offshore?
I think, yeah, we have to drill more offshore and onshore and open up the pipeline and reverse almost all the energy policies of the Biden administration.
At the same time.
You can walk and chew gum, yeah.
How do you fix inflation? Because most people look at it and say this is the Fed's job to do at this point. What can government do to help?
Yeah, that's a good question. I mean, I think the Fed obviously has a role, and you don't want to just, have a bunch of politicians, mucking it up. But getting out of the way and letting the economy grow, we eliminated or rewrote 14,000 regulations, and we made our government unabashedly pro-business and pro-jobs, and changed the whole mission of state government to say, how do we help these small businesses grow and put more people to work? And I think, by cutting taxes and putting more money in people's pocket, we passed the Retirement Tax Elimination Act so that people that were, on fixed incomes didn't have to move out of our state because they're being taxed too much. I think there are roles to play both at the federal, state, and local government, and actions that should be taken. But we got to stop playing politics.
Well, Governor Hogan, thank you for coming in today.
Governor,
Thank you.
Are you going to be raising money?
Are you thinking about donating?
No, not me, but you know this, like the richest guy in the country, no, not really, but one of the most successful hedge fund guys, David Tepper, tells me, get him to run.
Oh, wow.
I love Larry Hogan, get him to run. And then he says, because you guys, I don't know, have some similar characteristics. I guess it might be take about. He goes, maybe that's why I like him. But I said, can I quote you? And he goes,
the hair, that's my strong suit. I had cancer when I first became governor. I got this very clean look now.
Yeah.
I used to have good TV hair. But no, that's great. I got my first thumbs up then.
You don't need anybody else.
We're here in New York.
Oh, wait a minute.
Raising money right now, actually, and we stopped by to see you.
Well,
We came in from
find this
Oregon
guy.
last night, and we're here with you today.
He owns what does he own now? The parent.
We're going to make a note of that. I'm going to follow up right away.
Pepper.
Tell him I appreciate
Two P's.
good words.
Two P's. All right, Governor.
Governor, thanks for coming in. We'll be following.
Thank you very much.
We'll see you again soon.
It was great being with you both.
You're lucky you came in today. I mean, that might be worth it right there, regardless of what you said.
With no question. Well, thanks for having me. It was a great opportunity.
You're welcome. There's limits, right? I mean, he can't fund the whole.
Yes.
Okay.
There are.
I like this seat. Maybe I'll just come and fill in whenever you
Great
Andrew
seat,
out.
isn't it? Yeah. All right, coming up, we're going to talk. We're going to talk technicals with Fairlead Strategies founder Katie Stockton. She's been almost dead on with some of her calls this summer. Seriously, including a technical sell signal within the last 2 weeks. She said that would lead to a 7% decline. Well, since that call, the S&P's down 6%. And who knows? And tonight, football's back. Watch the Buffalo Bills take on the defending Super Bowl champ, LA Rams. Ugh. Coverage, I'm from Cincinnati, Governor. Coverage begins at 7 p.m. It was horrible. I was there. At 7 p.m. Eastern Time on NBC and Peacock. Squawk Boss will be right back.
Time now for today's Aflac trivia question. What year did Coco Chanel introduce Chanel No. 5? The answer when CNBC Squawk Box continues.
NBC.
Now the answer to today's Aflac trivia question. What year did Coco Chanel introduce Chanel No. 5? The answer, 1921. The fragrance was originally given as a gift to customers at Chanel's Paris boutique.
Welcome back to Squawk Box. The futures right now are at least 2 out of 3 are in the green, barely. The S&P now up less than a point. If I wait long enough, could turn red. And then the Dow Jones up about 18 points or so. Breaking news in the last hour, UK Prime Minister Liz Truss unveiling her energy plan, lifting the ban on fracking and approving more drilling in a move to boost energy supplies. Also in the plan, a cap on energy bills that she says will curb inflation by up to 5 percentage points. She says it will save the typical household more than $1,100 a year.
This government is moving immediately to introduce a new energy price guarantee that will give people certainty on energy bills. From the 1st of October, a typical household will pay no more than £2,500 per year for each of the next 2 years while we get the energy market back on track.
We'll have more on this story and the energy crisis in Europe in just a bit.
How does that work, though?
I don't.
We're going to cap it, meaning the utility has to step it up?
I'm glad they're going to.
We're going to cap it.
I want to see. I'm glad they're doing it so we can watch this experiment, because if it works, it's like maybe the first time ever.
Okay, we're going to cap it, meaning the government will pick up the excess.
That's the only way.
Taxpayer dollars.
That's the only way.
Or we're going to tell the utilities they can't charge anymore, meaning they'll go.
I think it means the government's going to have to subsidize.
Which means the taxpayers are going to pick it up and.
It'll get it one way or another.
Yeah, it's just the details are going to be very important with how this works.
I mean, if you tell energy companies they can only charge this much, that's going to be a problem.
Yeah, if they have higher input costs than output costs.
Because then it's just going to mean that the supply goes down. Let's talk technicals. Fairlead Strategies founder Katie Stockton calling the recent downturn in the market after a brief summer rally. She expects the stock slump to continue through the first half of 2023. Katie Stockton, founder and managing partner at Fairlead Strategies, joins us now. Katie, how would we know whether we're on the cusp of something even worse than what you've been talking about? And there's a lot to worry about fundamentally. There's a lot of reasons why you could see something like that. You've talked about below 3,600. Do we need a capitulation bottom that gets the VIX much higher than it is, or is it different this time? And if we did see a 35 VIX, what would that equate to on the S&P? And I guess it depends on how quickly it happens, but it could be worse than 3,000, couldn't it?
It definitely could be. And I think the worry is that it's not 35 for the VIX, but actually 80, 90, like we've seen in past bear market cycles. So that would suggest that we certainly could have worse to come. And I think really what we're doing in our work is just trusting the downtrend and respecting the negative long-term momentum. Of course, now also the market has negative short-term momentum, and we don't want to fight against that. So as much as we want the market to bottom, just like everybody else, we don't want to get in front of it when it still has this downside momentum.
It's a little bit disconcerting that sometimes technicals can inform fundamentals. Because there are some people that think, all right, the bad news is kind of in front of us in terms of what the Fed has to do. But if the technicals are telling us that we could go much, much lower, then maybe we need to ratchet up the fears that we have about, what the Fed is actually facing and how stubborn inflation actually might be. So technicals can actually tell you you're not negative enough about fundamentals.
That's right. So one could argue that sentiment is actually too complacent considering all those concerns are out there. And what we look at are levels to understand what downside risk might be for major indices like the S&P 500. You mentioned 3,000. That's not a key level for us, but 3,200 is. That is a long-term Fibonacci retracement level, and it would be targeted by a breakdown below 3815, which is another Fibonacci retracement level. So we look for breakdowns to be confirmed. We always like to see a couple of weeks below a level, especially a big level like that, to assign a new downside target. But that 3,200 would be targeted by that kind of breakdown. And as you know, 3815 really isn't that far away. We saw the relief rally in the summer, very short-lived, very difficult to capture on the upside. It saw an immediate shift in market sentiment that to me was somewhat disconcerting. People are very willing to jump on board, especially in the high growth arena. And what we've seen is that the relief rallies in high growth are leading now to retests of support. So those names that had downtrended came off their lows, people got excited about it, added exposure. Now they're dealing with, in some cases, more than a full retracement of their gains. Names like NVIDIA is probably the most high-profile example of a name that had a retest that was unsuccessful, meaning it took out the support from the summertime low.
It's a bear market, I guess, Katie, because I was just listening to you, and when's the last time you said, well, on the upside, we're looking at 4,200 as the first resistance level, and after that, we're looking at 4,600. You don't even talk about things that are above where we are. That isn't even part of the conversation that we have with you. Is that indicative of something?
Yeah, we haven't been focused much on resistance, but what was wild is that the S&P 500 and a lot of individual stocks like Microsoft, for one, came right up into their downtrending 200-day moving averages and pivoted right there. Very precise resistance at those 200 days. And it makes me think that there is certainly a lot of eyes or a lot of computers with their eyes on these levels, these important technical levels. And indeed, that 200-day moving average is still resistance. We are always looking for stocks or ETFs that are in long-term uptrends to generate ideas for our clients. And it's really hard to find those ideas right now. We recommended just in the past few days corn. It's an ETF, CORN, and it was one of the very few things that we could find in a long-term uptrend, and of course that represents corn prices.
Well, you talk resistance all the time about yields, which is also bad. So talk about what's that looking like 10-year?
The 10-year yields, of course, came right above that 3.25 level that we've been watching. That is resistance. That's based on the 2018 high. And for a breakout to confirm, we want to see a couple of weeks above that level, and that would then target 4%. We do have some minor signs of upside exhaustion, both in yields and also in the dollar. These are based on the daily DeMark indicators, and what they would suggest is that we have a 2-week pullback in store for both.
Okay, and then, I don't know, anything to add on crypto? You might, it's like when you talk equity, it's the same thing. So,
yeah, I mean, it's another risk asset, and it should be treated as such, at least for now. Okay. Downtrends still have their hold. We've highlighted a chart of Ether in our report this past week because the relief rally, it starts to feel like with this forthcoming merge that it could be a sell the news type of event. The relief rally has already lost some upside momentum, and there's certainly some strong resistance there.
Oh, God. Okay, Katie. Thank you. Yeah, the urge to merge. The merge is, it's above where it's sort of outperformed Bitcoin at this point. I think it was at about 1,100 when Bitcoin was last down here. So it has held up better probably because of what you said, but you see exhaustion there too for that. Okay. Thank you, Katie Stockton. Okay. Excellent.
The UK energy plan will be funded by the government. It's going to cost the government tens of billions of dollars. That will be funded by government borrowing. So that answers your question.
Tens of billions of pounds.
Tens of oh yeah.
Which are like the same as
same thing. Same thing right now.
Which is a news story itself.
Right.
Yeah.
Ivan the K, smart tweet. There are no libertarians in an energy-starved foxhole.
Well, that's a first for him.
The flies on you again.
I see it.
When we come back, we are on Crypto Watch this morning. We're going to talk about where prices could be headed and what's being done on the regulatory front. But up next, will Apple's iPhone 14 be a hit with investors? John Ford is here. He's got a preview of what's coming up. Hi, John.
Hey, Becky. Yeah, Apple's product scheduled to arrive on time despite battling through a year of supply chain disruptions. But I'll walk investors through both sides of the argument on whether this new product is going to be a hit with the street when Squawk Box returns.
Apple yesterday unveiling the iPhone 14 lineup, and the company largely did not raise prices despite this year's inflation surge. With Apple stock outperforming the market this year until now, will the iPhone 14 be a hit with investors? John Fort is here to weigh in. John, it's nice to see you in person.
Yeah, great to be here. But, you know, when it comes to Apple stock, nice looking phone, but no. I mean, iPhone 14 looks great for consumers, not so great for investors, and here's why. Apple had a golden opportunity to raise prices here, just a little bit, $50. It chose not to, with consumer spending slowing down heading into Q4. And that means they'll sell a good number of phones, but profits, gross margins will probably get pinched, and investors won't like that at all. Let's look at the big picture. Apple does this every year, like clockwork. Announce an iPhone line in early September, ship in late September. Last year's new iPhone gets $100 cheaper, so now you got phones from $430 to $1,100 in almost perfect $100 steps. Now, when the economy was good, that worked out. With some consumers eager to trade down to a cheaper phone, though, it's going to be a liability. With a strong dollar likely to dampen international sales and high costs pressuring margins, investors, they're going to get an iPhone reality check, Becky.
But Apple did announce a lot of new features in high-end phones. Isn't that going to help things out a little bit when it comes to margins?
Well, on the other hand, this isn't Tim Cook's first rodeo. It might look on the surface like Apple didn't raise prices, but they did in the smartest way. Last year, there was an iPhone 13 mini, smaller screen, a little bit cheaper than the 13. This year with the 14, no mini. Instead, they have a new 14 Plus. Bigger screen, costs $100 more than the 14. So, bottom line, your entry price for the newest iPhone just went up. A couple more factors to consider, too. Apple intentionally loaded its higher-end phones with the best features this year, even more than usual. Satellite SOS, 48-megapixel camera, always on screen. That's going to tempt people to the higher-end models. They also launched a new Apple Watch Ultra and AirPods Pro that a certain percentage of iPhone buyers are likely to put in their shopping baskets as well. That's how you get customers to spend more without charging more. Even if margins are a little tight at launch as Apple ramps production, they'll quickly smooth out, and investors will be happy with this iPhone cycle, Becky.
Did you see Steve Jobs' daughter, Eve, poking a little fun at the new phone? She sent out something on Instagram that had a guy who is wearing a shirt, opening a new shirt and saying, it looks exactly like the one he's wearing, saying, "This is me upgrading to the iPhone 14 after the 13. Basically, it looks just like the last phone, not much new.
I did not see that. Wow. Yeah. Eve.
Yeah, Eve.
How much stock does Eve have in Apple? She's gonna look askance at Tim Cook.
Well, she's probably got a lot in Disney, you know. So once she starts mocking the new Pixar flick,
give me either.
She'll be in full rebellion at that point.
I know, but if she's got plenty of,
I think she was trying to be lighthearted, but she probably forgets that anything does is going to be so closely.
I just think if you had to, you know, it was a tragedy what happened to her father. But Tim's carried that, when you pass the baton to him, you'd probably be pretty happy if you were a member of the...
But also, Steve wasn't exactly a corporate button-down guy. He literally flew the pirate flag. You expect Eve to just, you know, step in line? That wouldn't be a Jobs thing to do.
So then so then maybe it's genetic.
On the other hand. There you go.
On the other hand,
Thanks, John.
Coming up, we're going to talk crypto. Plus, the NFL is back, a preview of the NFL season and sports betting opportunities with the CEO of DraftKings. And be sure to catch tonight's kickoff on NBC and Peacock starting at 7 p.m. Eastern Time. It's exciting. We might actually see actual players in the NFL games instead of who were these people during the preseason? Who were they? They meant nothing. Squawk Box will be right back.
AlphaDayTrading.com.
Federal Reserve Vice Chair for Supervision, Michael Barr, said in a speech yesterday that stablecoins, like other unregulated private money, could pose financial stability risks. That was a quote. And that, in his words, Congress should work expeditiously to pass much-needed legislation to regulate stablecoins. Here to discuss, Perry-Ann Boring, Chamber of Digital Commerce founder and CEO. Anything earth-shattering in those comments, Perry-Ann? What can we glean from that about future regulation?
Yeah, so for one, Vice Chair Barr, in his statement yesterday, he said that stablecoins need to come under the Fed's supervision under the premise that they may be systemically important. That is just a vastly overblown assumption. The total value of stablecoins worldwide today is about the size of a mid-sized regional bank. Stablecoins, they're not a financial stability risk. Now, secondly, what he was doing was he was sending a message to Congress, urging them to pass a piece of legislation that is currently being worked on by the House Financial Services Committee. Please note, no one's actually seen this bill. The members of the committee hasn't seen the bill. The industry hasn't seen the bill. But somehow Vice Chair Barr is involved in the negotiations. I think we've got some kind of a tail wagging the dog situation going on here. The Fed really needs to focus on monetary policy, and they should leave the legislating to Congress. Now, we've always been supportive of having clear rules to the road for digital assets. I'm not saying there's no room for regulation, but this needs to be done in a transparent way.
Okay, this winter, maybe it's not a nuclear winter, but what we're seeing in crypto, will it resolve itself eventually, in your view? And is it as simple as the Fed's in a tightening mode that makes crypto less attractive in terms of being, there's a fixed amount, so we can print dollars. There's only 21 million Bitcoin. When the Fed gets tight, does that explain why we've seen these 60% loss in value almost across the board in crypto? Does that explain it?
I mean, crypto is volatile. It's always been volatile. It's a nascent asset. I do think it's important that we take a macro view of the overall market across the board on Wall Street. All risk assets, from equities to commodities, have seen large price swings and volatilities over the past couple of months. I do think there's a lot going on in our economy that's leading to volatility in the crypto markets. And I still think Bitcoin, it's a hedge against these macro factors like inflation. This is a largely misunderstood asset. And just to hone in another point here, for a decade, investors have been forced to navigate investing in cryptocurrencies alone, outside the existing financial advisory relationships. An ETF that directly holds Bitcoin would change that. Yet the SEC has continued to unjustifiably block every attempt to bring one to the market. It's truly one of the largest conundrums in the industry, and something that we'll be releasing a report on imminently.
What would the SEC need to see from other regulators or Congress to feel that was something that finally had its time, the ETF? What would allow them to feel good about that, do you think, in your view?
In my view, I don't know if there's any other information that could be provided to the SEC. We've studied this issue in detail. We spent the whole summer diving into what happened at the SEC. How come over 16 companies, including some of the most respected institutions, have all been denied the ability to offer a spot Bitcoin ETF? And the SEC has put arbitrary and unique requirements only to Bitcoin on this industry. There's companies that are suing the SEC under discrimination because of this. So I think at this point, it's less about being able to provide data to the SEC about their concerns, and it looks like it's more of a political play.
Do you feel, just in technical reasons, Perry-Ann, we've seen pullbacks before that are very similar to this in the history of Bitcoin over the past 10, 12 years. Do you think that the stock market or risk assets or when we finally see a bottom there, is that when you think Bitcoin will finally bottom? And will it coincide with the Fed finally, having done all of its work in raising rates? Is that how long this could last? And what kind of number are you talking about potentially on Bitcoin? Is 10,000 a possibility?
I've always been very long on Bitcoin. I think we're close to the bottom at this point. Bitcoin has traditionally followed cycles to its halving. The next halving will likely be in mid-2024. Usually it's 12 to 6 months before the halving that you see another run up. It is kind of unique where we've seen a lot more correlation for Bitcoin directly to the markets over the past couple of months, but historically it's been non-correlated to the stock market. So these are uncharted territories. I'm long Bitcoin. This is a marathon. It's not a sprint. And I do believe that one day Bitcoin will be globally recognized as a reserve asset.
Okay, Perry-Ann, thank you.
Good to see you, Joe.
All right, good to see you. Coming up, DraftKings CEO Jason Robbins joins us to talk the start of football season, and author and economist Judy Shelton on inflation, the Fed, and actually the new government, or at least the new prime minister in the UK. Squawk Box will be right back.
A morning meeting.
Good morning. Stocks struggle to continue the rally we saw yesterday. That first rally in 7 days. Futures are muted after the best day in nearly a month that we saw. Breaking economic news: the European Central Bank ready to announce its latest decision on interest rates, and the global markets are watching. Plus, the UK's New Prime Minister takes steps to deal with the growing energy crisis. The final hour of Squawk Box begins right now.
Good morning. Welcome back to Squawk Box here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan. Andrew is off today. Been keeping an eye on the U.S. equity futures after a big update for the markets yesterday. You can see things are pretty flat today. Dow futures are up at the moment by about 13 points. S&P futures down by less than a point. The NASDAQ down by about 10. Yesterday, though, the NASDAQ was up by 2.1%. The Dow and the S&P up by close to 1%. Treasury yields have come back down a little bit after hitting some new highs. The 10-year right now sitting at 3.222%. And we've been getting some headlines out of the UK. Buckingham Palace says that doctors are concerned for the health of Britain's Queen Elizabeth II. They've advised that she remain under medical supervision. She is said to be comfortable at Balmoral. That's where she's been staying this summer. In the meantime, UK Prime Minister Liz Truss unveiling her energy plan that lifts the ban on fracking and also approves more drilling in a move to try and boost energy supplies. Also in this plan is a cap on energy bills that she says will curb inflation by up to 5 percentage points. She says it will save the typical household more than $1,100 per year.
This government is moving immediately to introduce a new energy price guarantee that will give people certainty on energy bills. From the 1st of October, a typical household will pay no more than £2,500 per year for each of the next 2 years while we get the energy market back on track.
The plan will cost the government tens of billions of pounds. It's to be funded by government borrowing. In the meantime, GameStop is doubling down on cryptocurrencies, signing a new partnership with crypto exchange FTX. GameStop will start carrying FTX gift cards in some stores, and FTX may sell other goods at GameStop in the future. That stock up by about 5.9%.
And now that this morning's other movers, individual names, Dom Chu is back with those. Hi, Dom.
All right, so Joe, some analyst calls are driving some of the bigger pre-market moves this morning. We're going to start with shares of Moderna, which are higher by around 2%, roughly 20,000 shares of volume. The biotech company is getting upgraded to buy from hold over at Deutsche Bank. The target price goes to $165. It was $155. Analysts there are positive on some of the new orders that have come in for its COVID vaccines and some of the bigger stock buyback program elements. Moderna shares the biggest NASDAQ 100 pre-market gainer right now. Next up, you got to say a slate of solar stocks. First Solar, Maxion Solar, both bid pre-market, while Shoals Technologies and Canadian Solar are being offered right now. This is likely due in large part to analysts over at Goldman Sachs who've upgraded First Solar and Maxion to buy from a prior sell, so a double upgrade. They've also downgraded Shoals to sell from buy, Canadian Solar to sell from neutral. This is due in part to expected benefits and leverage to the Inflation Reduction Act, so watch those solar stocks. And we'll cap things off with a look at Bilibili, which is down nearly 8% pre-market, roughly 500,000 shares of trading volume. This is after the Chinese video sharing and mobile gaming company reported a bigger than expected loss and then gave a lower than expected quarterly revenue forecast. It blamed, among other things, the immense challenges of the macroeconomic environment and, of course, China's COVID lockdowns. Other U.S. Chinese internet traded stocks, you can see NetEase, Pinduoduo, Baidu, and some of the ETFs that track them down likely in sympathy with those moves. So we'll keep an eye on Chinese internet given what's happened right now with Bilibili, guys. I'll send things back over to you.
Bilibili, does Bilibili mean anything to you?
No, but every time I hear that name, I think Beady Beady. Remember, like Buck Rogers?
It was Judge Smale's putter, Billy Baru.
Oh, well, Billy Baru, yeah, Billy. Oh, Billy, yes. Of course.
So it does mean something to you.
It does. But I keep thinking Beady Beady, Twinkie on Buck Rogers.
I keep thinking Louie.
Or Louie.
That was banned for no reason.
I don't understand.
I've looked it up, and I can't figure it out. That was banned.
You gotta go.
But how great was Ted Knight?
Amazing.
He was.
Back to Caddyshack. The futures at this hour are a little bit higher if you're looking at the Dow, up by about 25 points, but the S&P is barely up. NASDAQ's down just slightly. Our next guest says the current bear market provides a great opportunity for longer-term investors. Let's talk right now with Noah Blackstein. He's the senior portfolio manager at Dynamic Funds. And Noah, I always look forward to hearing from you because when everybody else zigs, you tend to zag. All we've heard is people who are very concerned about where we're headed lately. You're thinking, we've come down a bit, maybe a time to start shopping.
Well, we've come down quite a bit in certain areas for sure, and we've come down a lot since this year, really since started it kind of in November of 21 when the Fed decided inflation was no longer transitory and we were in some sort of long struggle against inflation. But you can be optimistic for two reasons. One, you're a contrarian, or two, you're just operating on a different time horizon. And I think this idea of time arbitrage or really excess returns are involved in taking a longer term time horizon. These are the types of opportunities where you say to yourself, who's been executing, who's been delivering, who's still got growth that's been able to, even through what we're going through, not only through COVID, but through the ripple effects of COVID and just complete insanity on the policy front and the geopolitical front, who's been executing. And then, as things calm down, will those stocks then be the leadership stocks coming out? Every bull market has new leadership, and I refer to new leadership not as sectors, but as companies. And so now is the opportunity. Certainly the lessons we learned in 2002 and in 2008 and 9 is to continue to work even, it's not like we don't work hard now, but to work even harder to find those companies. These are the opportunities that the market provides you. That doesn't mean the next 5 days or the next 5 months are going to be fantastic, but it's certainly the outlook over the next 3 to 5 years. And this is where you make your money today for the next 5 years.
So Noah, what do you like? Do you have a shopping list?
Yeah, I mean, we've been looking at all sort of areas, whether it's been in healthcare, in technology, especially software, in the retailing space, where companies have been hit hard by overstimulating demand with the stimulus money, and then getting caught with short on supply and supply chains. But there's been a few companies in the restaurant space and the retail space, whether that's been a Chipotle or a Lulu, who've been able to execute, and who, as things calm down, will probably be able to continue to deliver on not only on that growth, but obviously, given how dim things look in a lot of the retail space, will also continue to have significantly less competition. And that's also true in e-commerce. Those companies that attracted customers during the pandemic and have held on to those customers present very interesting opportunities, because as things normalize, as we anniversary the difficult compares in e-commerce, which we've just about done, that's not going away, and secular growth to online isn't going away. So the opportunities being provided for you, if you're willing to look, are certainly there.
The counter argument to that is, look, the Fed is going to have to raise rates higher than anticipated. It's going to have to keep them there longer than anticipated. That's going to drive unemployment higher than people are expecting for you. We talked about this earlier today. There's a column out from Jason Furman where he looks at some of these issues. Of course, he was a former top economic advisor to the Obama administration. He says we could be looking at 6.5% unemployment for a couple of years before the Fed's able to actually get rates back to, or inflation back to about 2 or 3%. Does that change your environment, your outlook for any of this, Noah, or you really have a much longer timeline? 3 to 5 years is a long time to wait.
Right. Well, I certainly have a longer time horizon. I will remind everyone where inflation was this time last year and how everything that was coming was supposed to be transitory. And now we're in some long, prolonged struggle, and everyone's turned themselves into Paul Volcker. So the great thing about economics is it's a social science, not an actual science. And so the reality is that prices have come down significantly. I wouldn't be surprised, as things progress, the year-over-year inflation numbers turn negative as we move into 2023. You've seen certainly collapse in a lot of things, and supply chains are beginning to ease. So, I think the Fed really doesn't want to make the mistakes of the 1970s. I guess most of the Fed members were in their 20s in the 70s. They certainly weren't in their 50s. They certainly weren't around in the 50s, in the post-war, post-stimulus World War II era, and then in the 40s and 50s, where inflation was much more volatile, up a lot, then negative, then up a lot. But look, the risks are for me, as always, a federal central bank mistake. They've tightened a lot in a very, very short period of time. They talk about financial conditions, which, is actually, I'm not sure where this has entered into the narrative of it's important to tighten financial conditions, even papers on their own website written by their own analysts would suggest that targeting financial conditions is nonlinear or asymmetric. It can only provide real problems on the downside and not much on the upside. So, they seem to be grasping at straws a little bit here. I do think, though, that it's clear that the inflation numbers are beginning to ease. Does that prevent central banks from going too far too fast and going way above where they should be? It certainly doesn't. Certainly seen that in my career. That's always a very big risk for me. And the uncertainty of Russia is always certainly a big risk. But those are things that you have to take in consideration of where the stocks trade, what's the price, and what's the future growth opportunity. It's certainly not without risks, this world, that's for sure.
You named a couple of names, Lululemon, Chipotle, things you like. But can you get more specific with the retailers? I mean, when you're talking about the retailers who had too much supply, have been chasing the consumer, are you talking the Walmarts, the Targets of the world? Are you talking Kohl's, Nordstrom?
I mean, look, you can look at, there were a lot of companies that bounced really hard in the vaccine, that Walking Dead rally of November of 21 when the vaccine news came, where you had, highly impacted retailers that were doing really poorly before the pandemic that, doubled or tripled within a short period of time. I don't know. And so, like, you can see it in the numbers of American Eagle. You can see it in the numbers of the Gap. You can see it in the numbers of the companies that split apart from limited brands and other ones like that. They were struggling before the pandemic. They had a bit of a bounce on stimulus checks, and now you can see with supply chains and other things, they're under severe amounts of pressure. I'm not looking for turnarounds. I'm not looking for companies to rebuild brands. I'm looking for companies that have been able to execute on what have been almost impossible circumstances to execute under, and focus my attention there, because those are the ones that are going to emerge out of this.
Noah, thank you. I appreciate the alternative view this morning. Good to see you.
Take care.
All right, coming up, the ECB decision on rates is just minutes away. We'll bring you the headlines and the global market reaction. Plus, join the most powerful investment event of the year as CNBC's Delivering Alpha returns in person on September 28th. Among the amazing sessions, I'll be sitting down with legendary investor Stan Druckenmiller. If you want to be in the room where it happens, head to deliveringalpha.com or scan the QR code to register to join us in person. Stay tuned. Squawk Box will be right back.
HMT now.
Welcome back to Squawk Box. The futures right now is, you can see they're mixed, up 11 on the Dow, but the S&P right around plus or minus a point or so. Let's get to Steve Leisman with the latest on the CCB decision. Steve.
Joe, the European Central Bank joining the 75 Club, raising interest rates on both its major facilities, the deposit facility and the benchmark refinancing rate, by 75 basis points. So it goes on the deposit facility from 0 to 75 basis points. That is positive for the first time in a very long time. On the benchmark refinancing rate, going to 1.25 from 50 basis points. Reading here, the interest rate will both be set as of September. That's the principal news I'm reading here, Joe. It is joined Canada yesterday, and of course the U.S. Federal Reserve Bank going by 75 basis points twice here. So we will see at the press conference coming up at 8:45 the extent to which Christine Lagarde, the ECB bank president, addresses the issue of some of the differences in interest rates across the European central bank spectrum, how the ECB is processing the potential cutoff of gas, or the actual cutoff of Russian natural gas, and the inflationary impact of that. Plus another issue that I've been watching and trying to report on, Joe, which is what happens if European governments end up doing pretty massive subsidies to the public about the issue of these to subsidize the natural gas price increase and the inflationary or potential inflationary impacts of that. So 75 basis points for the first time, I think since the ECB existed, doing 75 basis points here, Joe, and trying to get, I guess, in front of this. I'm just interested here real quickly, looking at the dollar index, which was 109 going in, and it's pretty much unchanged. The euro pretty much unchanged. Looking at U.S. rates here, 323, actually a touch lower here on the U.S. Interest rate complex there. And stocks, let's see, futures, kind of unchanged too, Joe. So this looks to have been fairly well priced in. Looking at the market, it was somewhat divided futures market. I think a 70% probability of this 75 basis point hike, and then Christine Lagarde and the ECB delivering on that. Joe?
Well, I think if you were trying to trade, I mean, initially we had a slight bounce in all the equity markets, Steve. The Dow was up about 60 just 2 seconds ago, and the way I would interpret that is we don't want any central bankers around the world to have their head in the sand. And that just makes the dollar too strong, which makes it very difficult for multinationals probably to do business. But then you come back, think if you're a trader. Okay, so you got that, but then you think, wow, everybody's got to raise rates to deal with this inflation, and we are just in a tightening cycle. So, you know, anything that we talk about, you can look at in one way or another, but we are in a tightening cycle with some increases that we haven't seen here in years, and as you just said, never in the ECB before.
Yeah, it needs to be done, Joe. And, you know, we used to talk a lot about central bank coordination, and that's on the way down when there's room to cut. They talked about that. But right now, it's sort of every bank for itself out there. The U.S. has led the way, raising rates, and now Canada has been very careful to remain in lockstep with the U.S. European Central Bank kind of was dancing to its own tune. I think you could argue that it was even later than the Fed was in terms of hiking interest rates. And Japan, of course, is in some other planet or universe when it comes to what's happening with both inflation there and with its central bank. So you can't count on them. I think, Joe, Europe is a bit of a mess right now when it comes to the possibility of recession. And the question we have to ask ourselves is how much of that ends up sort of washing ashore here when it comes to the U.S. economy. They have all sorts of issues over there, higher inflation, probably a deeper recession. As you know, the Bank of England, Joe, uncharacteristically for a central bank, forecast a recession in its in its latest forecast.
So they're going to, we just heard, okay, we're going to pay for your energy, you know, whatever, if it's too expensive, we're going to basically subsidize it. So inflation is going to be lowered by, how does that work? Okay, so the consumer won't have the inflation, but the government's got to print money to cover what the consumer doesn't have. So how is that? You know, it's like it's just more inflation down the road. There's no free lunches.
Joe, as your dutiful Squawk Box economics reporter, I tried to report that story in Jackson Hole, and I had some conversations, tried to have some conversations with some European central bankers about that question, and they decidedly didn't really want to talk about it. I brought up this issue. I said, if you end up subsidizing, that ends up being a big fiscal impulse, which ends up being inflationary on the other side. And they were like, You know, you can't really talk about that so much.
They're all buying sweater stocks, Steve, which we decided.
And dollars.
Canada Goose. There's a couple other sweater companies because they're going to set the maximum temperature over there at like 65 degrees eventually. Because don't the
Irish make great sweaters, Joe?
I think so.
Joe, don't the Irish, they make terrific sweaters. But Joe, if I could just be serious for a second, it's not crazy to think that one of the things, of course you are, I should know better. But it's not crazy to think that one of the things that propelled the ECB towards this higher rate hike, the 75 rather than the 50, was this concern about the inflationary impact of this. We have to watch. Germany could do a big fiscal spend, and others as well, in terms of subsidizing this. And I think that adds to the inflationary impact rather than dissipates it.
All right, lease maniacs. Thank you. See you soon. Thanks, Steve.
See you soon.
When we come back, DraftKings CEO Jason Robins on the start of the NFL season and the big business of sports betting. Stay tuned.
Opportunity.com.
The NFL season kicks off tonight with the Bills and the Rams facing off. It also means the start of football sports betting. Joining us now is Jason Robins, DraftKings CEO. It's a great game. It's on NBC. Buffalo's great. It's back to the scene of the crime against the Bengals, too, Jason. That is one cool stadium. out there. I was in it, and I mean, terrible things happened there, but that is one very cool stadium. You must be excited about the season. Baseball's, I've been doing it, but it's hard. It's hard to do DraftKings with baseball. Every day's, you know, the worst team in the world can beat the Yankees or Houston on any given day.
Yeah, it's almost like the NFL. I mean, I love baseball, but nothing like football season. This is such a great time of year, and you know, what a great way to kick off with the Thursday night game. We're running an awesome promotion where if either team, you bet on either team, if they go up by 7 at any point in the game, you just get paid out right away. Doesn't matter if they end up winning or what happens. So,
wait a minute, I didn't see that. Really, is it maximum $25?
I don't know what the max is. I have to check, but you should go check it out. It's pretty cool promotion.
That is a good promotion. Well, speaking of promotions, you guys are all after the, you know, maybe not necessarily the same people, but there certainly is a lot of competition, which makes it hard to make a lot of money. How's that going right now? The heady days of when things were getting legalized in different states and the multiples ran up. It's a tough business right now. Where are you in terms of how much money you're making and everything else? What you expect to make, what kind of growth you expect to see, and how expensive is that growth?
Well, the growth has been tremendous. We had, you know, a huge quarter last quarter. Looking forward to a big back half of the year. I actually think it's quite different this year. I think last year around this time, it was very much the way you're saying. It was sort of the peak of it almost, maybe last NFL season. But it's much more rational now. A lot of the competitive spending is really tapered. And, you know, I think companies are moving more towards a path to profitability, whereas last year that wasn't even a discussion at this point. So, you know, I think that's kind of where the market is. It's the evolution we expected. Obviously, with a lot of states opening up, there's big land grab. The growth still is tremendous. So as we move towards our own path to profitability, we're still expecting really big growth numbers. You know, that's not going to slow down. So I think it's kind of going where we thought it would. And I think this year is just way more, you know, rational from a competitive standpoint.
So the more states that open up the DraftKings, is that important on that path, or is that solely what you need, or innovation, or what else do you need?
I think it's really more execution. Obviously, more states will help us grow our top line. It also means more investment, though. So, you know, we've often said that if you had no new states come out, we get profitable pretty quickly because, you know, the states that we're in, as they get to that 2-3 year mark, they start to kick off real cash flow. And we have several states. We have 10 that should be contribution profit positive this year. But those are offset by new states like Kansas, which just launched a week ago. So, you know, really it's less about new states from a profitability standpoint. Definitely, you know, from a market size and then ultimately top line standpoint, it's about new states. But right now we're growing quickly in the states we're in. And, you know, I think our path to profitability is really not dependent on states. That's much more about how big can the business get.
Right. You probably saw Uncut Gems or whatever it was. You probably saw the late, great James Caan as the gambler. I mean, there are concerns about things getting this widespread. And you try to help people, I think, that if you identify issues, is that stigma lessening in terms of, you know, I guess it's the vice versus the personal freedom debate that we have all the time. Well, I mean, does anyone make money long term? I don't think so. But you know, we spend, the house, but we spend a lot of money on alcohol too, and all that does is, you know, that's not good for you, but you do it because you enjoy it, and it costs money. I kind of think gambling is kind of the same thing.
I mean, it's the same as going to the movies or, you know, going out for a nice dinner. The only difference is you actually might end up winning money and be up on the night, whereas most entertainment activities, you know, you're spending. But, you know, really, I think there's a lot of misconception about really this whole debate, because what people fail to, I think, sometimes note is this is not an activity that doesn't exist today in every single state across the U.S. There are millions, tens of millions of people gambling in the illegal market right now. Those people are not protected in any way by regulations. Those companies are not paying taxes that help fund, you know, important things. States. So all we're really doing is taking an activity that's already occurring, that tens of millions of people across the U.S. are already participating in, and we're putting it in a legal framework that allows states to make tax money and allows consumers to be protected. And our responsibility, of course, is to make sure that we're at the leading edge of that. We invest a lot in our responsible gaming programs. We partner with other companies and with the AGA. We build models to help us identify people, and we have trained, people on our side that can intervene when necessary. So we have a lot of tools to really help people, and I think that's a huge plus of being in a legal regulated market that you don't see in the offshore market.
You can have fun with $5. People always say that I'm a loser because I only bet $5. It's the same. It doesn't matter whether it's 5 or 50. Doesn't matter whether it's 5 or 50. So you can do it within, a framework where you're not hopefully going to get. I won $120 on a $10 bet last night.
Congrats.
The Tigers, Dodgers, White Sox, and the Tigers rallied in the top of the ninth to win.
I thought you said baseball was hard.
It's hard. That's after losing like 15 straight times. So
you won $120 at a $10 bet.
So I've made up for it. Exactly. And there's a big game on tonight. You can watch it on NBC. Buffalo and those dreaded Rams that killed my Bengals. Thanks, Jason. We'll see you.
Weekly jobless claims data hitting the tape. Rick Santelli has those numbers. Rick?
Yes, on initial jobless claims, we dropped 10,000 to 222,000. That is the lowest level on initial claims going all the way back to the last week in May 27th, when it was 202,000. And if we look at continuing claims, 1,473,000 going the other direction. April Fools, because that's the last time we're up at these levels with regard to continuing claims that have been, for the most part, a little better behaved. But over the last several weeks, initial claims have really dropped and call into question the whole notion of how this tight labor market ultimately is going to figure into how investors and economists handicap the economy. We all know Jason Furman wrote an op-ed today talking about slack in the labor force being one of the critical tools that the Fed is going to continue to use to try to assess the level of pricing pressures. So these are very important issues. We all saw what the ECB did, and their yields are barely higher after a lot of volatility. Maybe it wasn't widely expected by everybody, but all traders I talked to thought that Lagarde had very little choice but to go fast and go hard. And with respect to its impact on the market, all our yields, Becky, from 2s out to 30s were lower again today until the volatility of the last 45 minutes or so, which has 2-year and 3-year notes going in and out of negative and positive territory with respect to their yields. But I would continue to stress that we have turned the corner a bit after that August 26th speech of our chairman of the Fed. Interest rates and equity markets, of course, thrown into a tizzy that seems to have moderated to some extent. Back to you.
All right, Rick, thank you. Steve Leisman joins us right now with more. Steve, what do you take out of these numbers?
Yeah, Rick is right to point out this difference, which is interesting between the continuing claims and the weekly claims. And I'm looking here. It looks like continuing claims are up by about 1 million, if I'm right here, 1.3 million to 1.47 million, a little bit more than that, actually. Which tells you that people are being laid off and spending a little bit of time in the being jobless before getting rehired. But the inputs, the weekly inputs to the jobless claims numbers are low, and it suggests the job market remains tight. The Fed wants to see a softer labor market. The Beige Book yesterday suggested that there was maybe some softness, but not a whole lot in an overall tight labor market. The question is, as Furman raises and everybody else here, how much softness do we need in order to get inflation under control? I still believe that putting people to work is sort of not inflationary. I think it may help with the inflation problem in the sense that it would increase supply in a lot of areas that are short of supply, both in the service sector and in the goods sector. So it's not clear to me that that is an inflationary problem, but certainly the Fed wants to see softer labor market. Joe?
Okay, Steve, thanks. Coming up, Judy Shelton on the Fed, the ECB, and what the UK's new Prime Minister is doing to deal with high energy costs and a sluggish economy. Stay tuned. You're watching Squawk Box on CNBC.
to get started.
An update on the British monarchy. Buckingham Palace says doctors are concerned for the health of Britain's Queen Elizabeth II. The BBC says Prince Charles, the heir to the British throne, is now with the Queen after she was placed under medical supervision. Reports also say that Prince William is on his way to the royal family's summer residence in Scotland. Again, it's not the first time we've heard the British Queen has been placed under medical concerns and medical watch. It is the first time we've heard them rush to her side like this.
Yes. Wish her well. Wish her well. Never know what's going to happen. The European Central Bank raising interest rates by 75 basis points to tackle soaring inflation. It's the ECB's largest hike ever. Join us now, Judy Shelton, a senior fellow at the Independent Institute and a former Federal Reserve Board nominee. She's also the author of Money Meltdown, Restoring Order to the Global Currency System. I'm surprised, Judy, that there has been some real positive feelings from different, I guess, different sectors about the new UK Prime Minister in terms of how she plans to deal with a sluggish economy and high energy prices. I don't know about these subsidized price caps she's going to put on, but some people are saying near term you can't worry about that. But long term, do you think there's reasons for hope in terms of less regulation, more pro-growth initiatives like lower taxes and less government spending? Are you optimistic?
I am. I think there's real reason to hope. Her new Chancellor of the Exchequer, Kwasi Kwarteng, just penned an opinion piece for the Financial Times earlier this week, and he said they will have an unashamedly pro-growth approach for the economy, and emphasizing lean government, which I think is a great theme, and lower taxes, less regulation, showing a special respect for entrepreneurship and small business. And they want a productive economy, and they see that as the best way to provide more opportunity and increase shared prosperity for their family.
Basically everything that we're not doing here.
Basically everything that we're starting to turn away from. Unfortunately, the price cap, I presume that is a political trade-off for increased fracking, which they have also said is going to be one of their pursuits. Price caps never work in the long run. You can ask anyone who ever lived in the Soviet Union. But I think they just felt that they had to give some sense of security regarding future costs to heat their homes for their citizens, and they did put a limit of 2 years on it. So, as I say, it probably was one of those trade-offs, but it's essentially a conservative, pro-individual, business-friendly approach that we can expect to see, I hope.
Hey, Judy, how we got here notwithstanding, are you in favor of the Fed and the ECB's these are pretty outsized interest rate hikes that we're seeing, and that we haven't seen it very often historically. It's going to hurt. And Jason Furman, among others, pointing out, there's going to be higher unemployment than we would like, maybe for a couple of years. But are you in favor of these actions to try to make sure that we don't let inflation get too ingrained in the economy?
Well, I think more people working is a good thing. I think we are looking at a supply side issue. So if higher rates cause businesses to fold and people to get fired, I don't see how that helps resolve inflation caused by too little output. I think it doesn't make much sense to engage in monetary tightening if you don't have a handle on reckless fiscal policy. So you have right now monetary and fiscal working against each other. They should be better coordinated.
Right. We're not going to get a handle on that, at least not for a little while. And are you saying you wouldn't raise rates right now? You're not going to get the supply side cures that you're looking for, not the way, where we are currently. So are you saying the Fed should not be raising rates, or now that we're already faced with this, they have little choice than to take that action? What are you saying exactly?
Well, I think, look, I'm in favor of a Copernican revolution in monetary policy. I think that we allow the Fed to be the center of the universe, and then that brings to the forefront exactly these kinds of conversations. And even getting obsessed with whether it's going to be 75 points in September and then another 50 and then another 50, or will it be 3 increases of 50 in the remaining 3 Fed FOMC meetings this year. I'm disturbed that it comes down to this because I don't think that just raising interest rates is the answer. I think, as I said, these other issues, trade and tax policy, energy policy, less regulations, all of those things would do so much more to have a productive economy. And instead, we just have the Fed trying to crush demand. So, no, I'm not happy with continuing to increase rates because I don't think low unemployment is inflationary, and I don't think growth is inflationary. But I understand that because we are fixated on the messaging from the Fed feels it has to live up to this tough approach and prove it's Paul Volcker. And we also see the ECB having to raise rates. Finally, they have a positive interest rate going to 75 basis points, but they're still considerably behind our own interest rate. And so there are still these effects on the dollar-euro rate.
When it happened last time, I mean, we saw what Volcker had to do, and there's a lot of historical parallels. There are a bunch of crappy policies that resulted in the mess we were in back in the 70s and early 80s, too. And we had to do that. I don't know whether you think the economy, there are people that think the economy would have stabilized even if Volcker hadn't done that. But it was followed by Reagan and the pro-growth policy. So you kind of had both. You probably didn't like 21.5% prime rates, but you liked what Reagan came in and did, and that fixed a lot of things for decades to come, in my view. Is there any way that can happen again, or we're going to be stuck with interest rate increases, but not the pro-growth policies after that?
Well, that's the worst of all worlds, and I would certainly welcome a change along the lines of the Reagan Revolution, which was based on supporting entrepreneurship and supply-side oriented growth. Growth is really the answer and gets us out of a lot of problems. So that's why raising interest rates to kill growth doesn't seem like a good solution to me. But you're right, we had the bad policies, including putting caps, including price fixing. Didn't work for us either. So those aren't the answers, but it needs to be a whole approach that includes monetary policy with one goal: to provide a meaningful unit of account, a reliable, honest measure, so that people can plan their lives. And I think that's a basic intellectual framework that we're missing from this Fed. And it would be better if we had a notion of sound money and sound financing going hand in hand. So that would mean a more prudent government. I would love to see working toward a balanced budget. And monetary policy's goal should be not to be driving this plane. I'm uncomfortable with everyone talking about a soft landing as if Chairman Powell is in charge of our destiny. That should not be the case. We should rely on the private sector and unleash the energies and the talents of all the people through opportunity. But we need a stable monetary foundation to enable that.
I thought we learned that one other time, what we need, Judy, but you never learned. Every generation needs to learn again. I think Reagan said something like that, that it's very fleeting, the lessons learned, and then you got to start all over again, and nobody's teaching anyone that stuff. Judy, thanks. Great to have you on.
Good to see you, Joe.
I still got this.
Get that fly.
I still got this fly. I don't know. Do things reincarnate? Do you think this is someone that I messed up in a past life? Yeah.
Maybe it's karma. When we come back, the CEO of Jeep will join us live with his roadmap for taking the automaker electric. Plus, a programming note for you. You can join the most powerful investment event of the year as CNBC's Delivering Alpha returns in person on September 28th in New York. Among our special guests, I'll get the opportunity to sit down with Carlyle co-founder David Rubenstein and Rockefeller University's Chief Investment Officer Paula Vollant. You can scan the QR code or you can go to deliveringalpha.com to register. Welcome back to Squawk Box. We've been watching the futures a little weaker right now. Not massive moves, but the Dow futures down by about 20 points. Right now, let's get to corporate news. Jeep rolling out its EV plans today. Phil LeBeau is here in the house, and he joins us with a special guest. Hey, Phil.
Well, it's good to be here, and more importantly, it's good to have Christian Meunier, who is the CEO of Jeep, joining us live to discuss the new plans by Jeep for rolling out electric vehicles. Christian, let's take a look at some of these vehicles. You've got 4 of them. We're not going to see all 4, but we're going to see at least the Jeep Recon and some of the other models or images of what you're planning on rolling out by 2024. Give us some perspective on what the game plan is.
But good morning, Phil. It's very exciting to be with you today, and thank you for the invitation. It's a big day for us because we're basically showcasing the 4xe technology that is associated with Jeep. 4xe is a big opportunity. The electrification for Jeep is a major opportunity for us. It's not a constraint. It's a way for us to make the Jeep, even more capable, even more fun, and bringing more freedom. Think about what you can do off-road with a Wrangler, doors off, top off, in almost silence. So a lot of opportunity for us, a lot of torque that comes with electrification. So once again, more than a constraint, it's a big opportunity for us. And we've been showcasing that with the Wrangler 4xe, which is #1 plug-in in America already. And in Europe, you know, Renegade and Compass 4xe are #1 LEV, so low-emission vehicle in Italy, our largest market. So big success. Now we've revealed 3 cars. Yes, sorry.
Well, I was going to say, well, I want to talk about the capabilities and just a little bit about EVs off-road and the market for that. But I have to ask you about Jeep sales, because under Sergio Marchionne, when Fiat Chrysler really pushed Jeep starting in 2008 all the way up through the beginning of the merger with Peugeot. I mean, sales were red hot, but it's been a challenging last couple of years. Do you look at this and say, okay, yeah, we did have some challenges, but we think this is the roadmap to reignite those sales?
Just think about it. In 2009, we're selling 300,000 Jeep globally. And in the last 5 years, we've been selling between 1.2 and 1.5 million globally. And in the major markets like North America, we've kept growing. Today, we represent almost 6% of the total market in North America, represent more than that in South America. In Italy, our largest market, we're at 5% of the total market. We're growing. We're growing. Obviously, there's been a few chip shortages and a few issues that we had to deal with. But at the same time, our icons, the Wrangler is breaking sales record. The Grand Cherokee is literally booming and growing every month. We have 20% of the market in the US. We're number one in the segment. So the brand has tremendous momentum. The consideration for the brand is booming right now, and especially with the millennials. You know, we have a very good sign for the future. Think about it, 20% of the baby boomers, which obviously buy a lot of cars right now, are very familiar with the brand and are very keen on purchasing Jeeps. It's 50% for the millennials, 50% intending somewhat to buy a Jeep. So talk to a high school student. What do they dream about? The Jeep. A Jeep, an electric Jeep.
But Christian, I have to, we're running up against a hard out, but I want to quickly press you on this one point. You're right, Jeep has great brand appeal, but are you able to sell a Jeep, EV Jeep, for under $50,000, let's say closer to $40,000 or $45,000? Because the knock on EVs, not just what you're planning on rolling up, but all EVs is the price points are simply way too high right now, and that's going to limit the amount of sales.
So it's definitely a challenge that we have. The cost of electrification is high. At the same time, the cost of the batteries are going to go down. The chemistry is improving, and we know that in a few years, we'll be in a position to offer much more affordable EVs. At the same time, we're going to bring, obviously, electrification down to smaller segments where the price is more sensitive, and we'll be able to do so. What is very critical, obviously, for us is to get support from the government for that period of transition until the battery and the cost goes down, which is really a good news that the government in the US announced that new plan for electrification that's going to be very, very supportive of all the efforts towards electrification. So we're confident we're going to bring vehicles which have a component of affordability. Are they going to be low price? Probably not. And that's why we're not bringing the Avenger in the US, because that's a small vehicle that would be probably too expensive for the size of the vehicle in the American market.
Christian, I hate to wrap it up because I could talk about Jeep going electric all day long. I know we will talk with you more in the future. A big day for Jeep. Christian Meunier, CEO of Jeep, thank you for joining us live. Guys, 2024 is when they go into production. Big couple of years here for Jeep and all the automakers as they roll out these new models.
What's he mean when he says, imagine what you can do in a Jeep that has no windows, no doors, and you sneak up on them because they can't hear you coming? Are we talking wildlife or are we talking something else?
Hey, I'd love to take one of those truly off-road and see how they perform. Not just Jeep, but all EVs.
Faster torque. Yeah,
yep.
Faster torque.
If it's rocking, you don't come a knocking. Is that what you're saying?
No, if you're sneaking up, that's not what I was saying. If you're sneaking
That's what I thought you were saying, because your mind goes right into...
Somebody, no, this is all you.
Okay.
If you're sneaking up on somebody...
Right, Phil, you've heard that, right? The van's rocking, don't come a knocking.
It's a Jeep. Phil, thank you.
Thanks,
Good to see
guys.
you in person. And tomorrow on Squawk Box, we should warn you, don't miss our live interview with the CEO of Intel. President Biden is going to be at the groundbreaking of the company's new microchip factory in Ohio. Stay tuned. Squawk Box will be right back.
Good morning, ladies and gentlemen. What's up? What's going on? Happy Money Thursday. Hope you guys are having a wonderful morning, that you guys are all set, ready to rock and roll, and to have an amazing day in this market. So, ladies and gentlemen, we're going to dive right into it. We got a lot to talk about, and we have a lot to fit in such a small window of time, and the reason for that is at 9:10, we do have Jay Powell speaking. That could be 5 minutes, 10 minutes, but we want to be listening. We want to be paying attention to see if what he says moves the markets, right? Do we see a lot of volatility return? Do we see some great action to the upside? Are we going to see some crazy action to the downside? So I want to make sure that we are able to talk about the top stocks today that have the best potential. We may not have time to dive into the back burners because at 9:10, we want to be listening to see what Jay Powell has to say. Anytime that a Fed, especially Jerome Powell, gets on the mic and he's being interviewed and he has something to say, you definitely need to be listening because sometimes it will absolutely move the market, and that's right around the corner in the next 10 minutes. So, guys, we're going to dive right into it, talk about the top stocks for the day, get you guys prepared so we're all set, ready to rock and roll. All right, so go ahead and hit me with that big old good morning and happy Money Thursday, ladies and gentlemen. All right, so let's go ahead and dive into it, guys. Are we good on the speaker? I want to double check real quick before we get those. Hey, I got you in one ear. Let's make sure I got you guys in 2 ears. We in 2? Oh, we're in 2. Fantastic. We're all good to go. All right, so number 1 today, team, could be PIXY, right? So PIXY announcing plans to spin off Shift Pixie Labs and dividend its digital securities to shareholders. Now we got PIXY going from 11.21, hitting highs slightly over $25. We're starting to pull back a little bit, which is needed. We need to see the stock pull back a little bit here at this point in time, guys. All right, so where is going to be support? Well, it definitely could be $20 natural support, but I see better support down around $19.20. Look at the daily chart. Look at all of that support we had at $19.20 here from July into August. So again, if we do crack below 20, $19.21 is a great level of support here on PIXY. So as long as we stay above $19.20 or $20, I believe we have some great potential to the upside today with PIXY. All right, this is the lowest float stock on the leaderboard. It is the one stock that is absolutely ripping at this point in time. It's up over 100%. It's less than 1 million in float. It's trading 3 million shares. On average, we trade 70,000. We got some great potential today here with PIXY. But one thing I also want to point out is it does like to give a little bit back. It likes to go on these nice big runs, but it does like to give some back. Goes on a run, gives a little bit back. Goes on a run, gives about 50% back. Here recently, goes on a nice big run, gives over 50% back. So yes, I do believe we can open and definitely squeeze and definitely see some great action out of the gates. But I do think at some point today, we're going to top on out and we're going to start fading and falling and probably leave one big upper shadow, as this stock is pretty notorious for getting those big spikes and then giving a decent amount of those gains back at that day, in that day, towards the end of the day, whatever the case is. So if we see some great action, let's definitely take advantage of it. Let's definitely lock in some profits. But let's make sure that we're not greedy holding on to this too long because it could give quite a bit back. But right now at this point in time, PIXY is going to be one of our top stocks today. Again, we have support down at 19.21. and then right around 20 bucks as well. Current resistance is going to be 23.75. Resistance over 23.75 is going to be up towards around 25 bucks. And then over $25 today, we could see PIXY up towards around 28 and then $30. All right, so right now at this point in time, once again, PIXY is going to be one of our top stocks to be watching right out of the gates. All right. Number 2 is going to be NEXI, signing a service agreement to advance multiple immunotherapies targeting rare cancers, right? So we have cancer in this press release, signing that service agreement to advance multiple immunotherapies targeting these rare cancers. That's why we saw NEXI get a nice big rip from 126 to 165. Current support here on NEXI is going to be 140 at this point in time, guys. Right around that 140 level support here on NEXI. All right, so if we can hold that level on up, we could definitely see the stock spike back on up towards around pre-market highs at 165. And if we ever see a break over 165, we could definitely see this up towards around 183 today here on NEXI. So I definitely want to keep this one on watch. NEXI is a nice lower float stock, has a good press release, definitely has some activity here in pre-market. And as long as we hold that 140 level on up, we can definitely see buyers move back in, some volume return, and get that nice push back up towards around that high a day, and then up towards around 183 here on NEXI. So we definitely want to keep NEXI on high watch. IMRA was going to be a top stock, but we're starting to crack that trend line at this point in time, right? So here in pre-market, we come down and really grind this trend line, and we get some nice action off the trend line above 211 resistance. Well, we simply can't hold and stay above 211 resistance. Now I'm looking for the stock to be able to stay above its trend line to be able to get that bounce and that next leg on up. Right now, we're just falling below the trend line, not even showing an attempt to bounce here. So I don't know if IMRA at this point in time is going to be a top stock. Let's go ahead and back burner IMRA at this point in time. All right, we're going to go ahead and back burner IMRA at this point in time as we are falling below that uptrend. AMLX, again, anything here? Not really at this point in time. Nice big rip on up. It's sitting sideways. Why is this stock even moving today? Shares are trading higher after the FDA Advisory Committee voted that available evidence of effectiveness is sufficient to support approval of AMX 0035 for the treatment of ALS. Citigroup and SBV are now raising their price targets on this stock as well. So we have that FDA Advisory Committee voting that they have that available evidence of effectiveness, and that's sufficient to go ahead and support the approval of their treatment, which is great. The FDA is backing this drug. And then you do have Citigroup and SBV coming in with an outperform rating and also raising the price target to $48 and then $50. We got one big spike on up, and we've really just been consolidating and sitting sideways throughout pre-market. So what we're going to do is just watch this one above 30. And if it ever breaks 35, maybe we get some great action up towards around 40 bucks. I don't really see a lot of potential here today with AMLX, especially because it's not really moving all that much here in pre-market. But if we ever break 35 bucks, guys, we could definitely see some action today with AMLX. But right now, AMLX is definitely going to be a little bit of a back burner, okay? RVNC is definitely a back burner as well at this point in time. All right, so definitely a little bit of a back burner at this point in time. Looks like Powell's getting ready to speak. Let's go ahead and pay attention, guys, to this. This is definitely going to allow us to see, do we have some great opportunity in the markets?
Paul Volcker confronted our last and worst bout of inflation. Alan Green.
We still got about 2 minutes, though. So again, team, to keep this really simple, we're watching PIXY right out of the gate, number 1. NEXI, number 2. All right, we're going to have IMRA as a back burner. AMLX as a back burner. RVNC has potential, back burner that stock. ASAN moving on up with news, back burner the stock, okay? ISEE for the possible mid-candle breakout, okay? So if ISEE can start breaking 1530, that can bring in the volume for the mid-candle breakout up to $16 and then potentially 17 bucks. So you do have ISEE definitely on watch today for the possible mid-candle breakout. right? Want to see what Powell has to say and see if that moves and impacts the market in any way.
And thank you. Go ahead.
I don't think it's a failure of imagination on my part, nor do I believe anyone will be surprised if the first topic we turn to is inflation. As Jim mentioned, it seems policymakers were given, including at the Fed, were initially given a bit of a head fake on inflation. We heard policymakers ascribing the increase in price inflation to the pandemic and related supply disruptions. And while this has undoubtedly contributed, there seems a much stronger consensus now that it's been in larger part policy driven. Can you discuss for us or give us some insight into how your thinking evolved on this topic over the last year and a half, and how those conclusions may have evolved as well?
So, Peter, thank you, and Jim, thank you, and congratulations to both of you and to Cato on 40 years of great monetary policy conferences. So I think a good entry point for that question, Peter, is to start by recalling that before the pandemic, unemployment was at a 50-year low, inflation was low and stable, and the economy was growing steadily, with no obvious imbalances threatening continued expansion. So, of course, in that sense, none of this high inflation that we see around the world now would have happened without the pandemic. The pandemic severely disrupted the economy, gave rise to risks of much more dire economic consequences than actually transpired really. And that was thanks in part to the policy response. So to start with policy, there's no question that policy certainly supported strong demand. But in my view, you would not have seen anything like the inflation that we have seen without the pandemic effects. And those pandemic effects include both shifts in demand and also playing a role in, not solely causing, but playing a role in the supply side constraints that emerged. So as for the pandemic, it did lead directly to an extraordinary shift in demand away from in-person services and to goods. And that shift, of course, was a major contributor to inflation in goods prices, which was really the main inflation story at the very beginning when inflation broke out suddenly in March of 2021. It's worth remembering that inflation actually declined in the early stage of the pandemic and then suddenly rose up in March of 21. The pandemic also contributed to the constrained supply in a number of important ways, including a large and persistent reduction in the size of the labor force, which contributed to extremely tight labor market conditions and upward pressure on wages. Also, the turmoil in global supply chains was probably caused to some extent by pandemic-related shutdowns as well as strong demand, particularly goods demand. I think cars are a good example. So yes, people had money and rates were low and demand for cars was strong, but also the pandemic shifted demand upward for cars because some people wanted to avoid public transportation. That amped up new demand for new and used cars. And also the shortage of semiconductors for cars emerged from pandemic-related demand shifts as well. So the bottom line for me is that there's really a role for both here, and the two are tangled up in a way that it's really not easy to disentangle.
Those of us who grew up in the 70s, I think that the danger and cost of inflation, can't be exaggerated. In September of 1979, his first testimony, a month after he was confirmed, Paul Volcker made clear he understood the damage that was being caused by inflation and the need to bring it down, even if it required great costs in other economic ways. One of the lessons of that episode was the greater the extent to which inflation slips the leash, the higher the cost and greater economic damage necessary to bring it under control. I worry whether we have the resolve to bring inflation under control today to face the potential economic costs. I took some comfort from your recent remarks in Jackson Hole, which seemed an attempt to signal that kind of resolve. But I do remain concerned that, the intense political pressure that might be brought to bear to avoid collateral economic damage before the inflation fight is won. And I just wondered if there's any way you can help me sleep a little bit better on that score.
Sure. So I think it's worth going back and remembering, and I pointed this out in my remarks 2 weeks ago at Jackson Hole, 10 days ago, that what Paul Volcker did and the Fed did to finally get inflation under control followed several failed attempts to get inflation under control. And what had happened over the course of that long period of the great inflation is that the public had really come to think of higher inflation as the norm and to expect it to continue. And that's what made it so hard to get inflation down in that case. So it is very much our view and my view that we need to act now forthrightly, strongly, as we have been doing, and we need to keep at it until the job is done to avoid that. We think we can avoid the kind of very high social costs that Paul Volcker and the Fed had to bring into play in order to get inflation back down and set us up then for a long period.
Yeah, get the info and let things run.
You know, that speech, the point really there was to deliver a speech that was narrowly focused on inflation, more direct and a lot shorter than a typical Jackson Hole speech. And I thought that what was appropriate was a very, kind of concise and focused message. To your question, the message really was that the Fed has and accepts responsibility for price stability, by which we mean 2% inflation over time. That, again, to your question, the longer inflation remains well above target, the greater the risk that the public does begin to see higher inflation as the norm. And that has the capacity to really raise the costs of getting inflation down. So finally, history cautions strongly against prematurely loosening policy. I can assure you that my colleagues and I are strongly committed to this project, and we will keep at it until the job is done. I can also assure you that we never take into consideration external political considerations. We are accountable to the public through Congress. That's a very fundamental, important aspect of our work. But we do not. We focus solely on the goals that Congress has given us, and that's what we're going to do.
That was exactly my takeaway. That he has no intentions on pivoting anytime soon. That history has suggested in the past that when they ease monetary policy too soon, it causes more trouble. So again, he has no intentions on letting off the gas pedal anytime soon. Full steam ahead. Things could get a little bit rougher and harder for individuals and businesses and things like that. So and we're seeing the markets drop a little bit. Nothing too crazy, but again, it was definitely important to take a moment to listen to see what he had to say and and see how the markets reacted to that. So we'll continue to kind of listen and see how the markets move. But right now at this point in time, let's just really break down these technicals and get you guys prepared for today's trading session. All right. So the main level that I'm going to be looking at today on the SPY is 396.81, right? 396.81. I want to see the SPY bounce back up, retest 396.81 as resistance, and that's where I want to be getting short on the SPY for the drop back down to this low of 395. And then we're just going to look left at some of yesterday's levels. Okay, we're going to look left. Then we could see it come down towards around 394.40, right? Resistance and support right around 394.40. We crack below that level, look left, 393, right? And that's all we're going to do is just, again, look for the bounce on back up on the SPY, see if 396.81 holds it down as resistance, and if so, play puts off that level down to this low here, 395, then look left again, 394.40, look left, 393, and we're going to do that all the way down and see where we end up getting a possible reversal if we do get a reversal and a move higher. Okay, so those are going to just be some very simple targets here on the SPY to the downside, is just looking at some of yesterday's levels. Okay, so let's say we get that bounce back up to 396.81 and we eventually break above it. Well, we don't want to be playing it short. We want to be playing it long. Again, look left, probably up towards around 398.50, up towards around 400. And then 401.21. So in my opinion, it really depends on what we do at this 396.81. If we're above it, showing strength, holding a support, we're going to look to play some calls up towards around 398.50, 400, and then 401. We bounce back up to that 396.80, and we see a lot of weakness, and we see more selling pressure than buying, and it looks like that's our resistance level, and we start to sell off that 396.80. We definitely want to be trading the short and playing some puts on down to that low and then those targets from yesterday. All right, guys, so that's what we're going to be looking at on the SPY. right? And I do want to make one announcement. I made this announcement over on TikTok, so you guys are fully aware. I may not trade today. I'm definitely not in the right mindset. I'm not focused. I had a lot of things just happen over the last 2 to 3 days, very personal stuff. Definitely nothing I want to get into, but I just want to let you guys know my mind is not here in the market. My focus is not here. A lot of big things, not just little things that add up, but big things all at once that are really adding up, and it's just completely messing with my mind. It's definitely distracting me. It's definitely taking away my focus. So I want to let you guys know that I'm definitely not intending on really taking aggressive trades today. Unless I feel confident, I may start with a small position, small size. And if I realize, okay, definitely not today, shouldn't be trading, at least it's very small size. But if I feel good, I start to feel focused and confident, then I may scale up to take advantage of the market, guys. But right now at this point in time, I don't feel confident in myself based on how my focus is and the distractions and my mind just being a million miles an hour and a million different places. I want to make sure that I'm preserving my capital today. And I can always come back tomorrow and reattack it. Come back next week and we're all set ready to rock and roll. So my focus is to work with you guys today, really help you guys out, find these opportunities, see each and every one of you guys getting inside of Profits Chat today. And if you have any questions, definitely use me and abuse me. That's what I'm here for. All right, guys, but I just want to go ahead and make that announcement that if you don't see me actively taking these positions and taking these trades, that's why. And it's to the point, I don't even have my broker open today. I don't even have my main broker open because of that reason alone, and I don't want to feel the temptation to jump into a trade like I did last Thursday, not being focused. I'd rather remove that distraction altogether, remove the temptation, and again, sit back, relax, and enjoy this day with you guys and help see you guys make a lot of money in the market. All right? I appreciate you guys. Thank you. So anyway, that's the SPY, breaking that down. The Qs, right? The Qs, 298, right? So when we look at the SPY, it's going to be that 396.81. So that 396.81 level is that real level that we're going to be paying attention to, whether we're trading this long or short. With the Qs, it's going to be this 298, right? We just cracked that 298 level. If we come back up and hit that level as resistance, we're going to place some puts on down to this 296.50. Then we're going to look left, back down towards around that 295.30. Look left again, 294.30. So we're just going to look at some of yesterday's levels. If we are playing the short, some of those yesterday's levels are going to be areas that we want to be locking in some profits here on the Qs to the downside. Okay, another thing that I want to point out with the Qs that you don't really see with the SPY, all right, you got this nice little downtrend. So if you throw the Qs into a, say, like a 15-minute, not only did we just top out at $300 psychological resistance, we also came into that downtrend and topped out as well. And we are cracking below that 298. So right now, looking at the Qs, they definitely look more bearish than bullish. But anything in the market could happen, right? If we ever break back above that 298, we definitely want to look to place some calls into this downtrend and expect to see a break of the downtrend back up to 300. And that could really bring in some buying volume to get that break of the downtrend and that break of 300 for that daily uptrend retest. So again, when you look at the Qs, you do have that multi-month uptrend, and we are technically below it. So if we do break this downtrend here today, we do get back above 298 and we're looking to break 300, that doesn't mean we're in the clear, because we still have that uptrend on the daily that's going to hold this down as resistance until we're able to regain it. And once we regain it, that's when we could really start to move higher into that 305, 307, 310 area. So you definitely still need to be paying attention to that uptrend. Yes, we're below that uptrend. Yes, we're considered bearish. But how many times have we seen a trend line crack and the stock regain it and move higher? So we still need to be watching that level. At any point in time we regain this uptrend, we could start to move on back up here on the Qs. But what we could see is that leg up today for a final retest as resistance before we really start to see the next leg down. So you have to be very, very mindful of where that trend line is. So if we do see a reason to play calls today, and we have a reason to buy this break of the downtrend if we're above 298, and we're starting to break above 300, that trend line today puts us right around 301.70 to 302, and that's going to be a level that we definitely need to keep on high watch, guys. All right, but right now at this point in time, we're below that downtrend. We're cracking below 298. I'd love to see a retest of 298 to play the short. I'm definitely leaning to the short side today here on the Qs, and I'm definitely leaning towards the short side today on the SPY, which really hurts these individual stocks. I was looking at NVIDIA to the long side today for a continuation. Well, I don't think the SPY and the Qs are going to get that move higher. So that means NVIDIA is going to move lower, assuming the SPY and the Qs move lower as well. If I am wrong with the SPY and the Qs and we see some great action to the upside today, that's going to really help out NVIDIA get that break. So if we do indeed see the markets transition in reverse and they look more bullish than bearish, and we're going to be playing the SPY and the Qs long, I'll talk to you guys about NVIDIA and get you guys prepared. If you want to get prepared, the details have been posted in the morning stock newsletter as far as what I'm looking at. But this is a good long trade, not a good short trade. So we have to see the markets move higher today, which right now it looks like the markets may move lower. So we won't really have opportunity with NVIDIA today. We wouldn't really have that opportunity with PayPal for the continuation to the upside. Wouldn't have that continuation opportunity with Disney or Amazon. But like I said, if I'm wrong and we see the SPY and the Qs balance and rebound and start to move higher, I think there's great potential and opportunity today with Amazon for that continuation, Disney, PayPal, and NVIDIA to the long side as well. So we'll definitely keep those on watch if the markets move higher. But if not, we absolutely have the SPY on high watch, great opportunity to the downside. And we have the Qs on watch, great opportunity to the downside, all right? Once again, ISEE on watch for the possible mid-candle breakouts, all right? NEXI on watch above that 140 for the leg back up towards around 164 and then up towards around 183. Definitely want to keep NEXI on watch today. PIXY is definitely the number one stock at this point in time. So right at 9:30, the one stock we're watching is going to be PIXY, followed by NEXI, and then ISEE for that mid-candle breakout, right? ASAN, back burner, right? RVNC, back burner. AMLX, IMRA, current back burners right at 9:30. These three stocks have the best potential right out of the gate. PIXY above 23.75. We definitely could see a nice little push up towards around 28. And then 30, NEXI above 140 support. We could definitely see buyers move back in for the next leg up to 165. And then ISEE, I expect to see volume move in over 1530. And that's where I expect to start to see buyers and traders move on in for that mid-candle breakout up towards around 1592 to 16 bucks. And then I'd be expecting a $16 break up towards around 17 bucks here on ISEE. For that mid candle. Want to see the stock hold above $15 at this point in time. All right, so I'd really like to see the stock stay above yesterday's close, $14.94, but ideally $15 psychological support. Again, we start to break 1530. I definitely want to think about getting long up to Tuesday's high a day, and then a break over Tuesday's high a day up towards around, again, 17 bucks here on ISEE, guys. Right? So that's going to be the watch list. That's what I'm focused on today, and that's what I think you guys should be focused on as well for the start of today's trading session. Again, keep in mind, there's been really a strong lack of follow-through in this market, and things fade off very, very quickly, right? So if you're in a trade, take profits quick. If you want to leave a runner, go risk-free on your runner. Don't be surprised if you get stopped out on your runner. We're not really seeing the follow-through, but if we get some follow-through today, your runner could definitely pay on out. But just remember, we're not really seeing that follow-through. We're not seeing that consistency as we were seeing over the past few weeks. Penny stocks are definitely starting to slow back down, guys. They're definitely starting to slow down. Besides PIXY, what's the number one stock besides PIXY? ASAN. It's up 20%. So we're not seeing 50, 60, 70% movers. We're not seeing 4 to 5 of those stocks really ripping and running. It's definitely slowing on down. We're definitely seeing, again, just that lack of volume and that lack of follow through in the market. So we just have to understand the market conditions, and trade with the markets and not against the market. So what does that mean? You see a great opportunity, take that trade. If it's not working out in that time frame that you expect it, and you're not really seeing the move take place, walk away from it. Secure your capital. You get into a trade that's working in your favor, take some profits on that trade, guys, because we're not seeing follow through. You get in, it starts working against you. Don't hold the bag. Don't expect it to bounce back up later. Cut your losses quick, walk away. If it sets back up, re-enter. Trade with the market, not against it. Again, lock in your profits quick. This week, we've seen some great action the first 30 minutes, and then things really die on off. So let's make it happen for the first 30 minutes. Let's lock in some profits, and let's have an amazing Money Thursday, guys. So let's make it happen today, guys. If you have any questions, let me know. We got about a minute 45 until the market opens on up. George, appreciate you. Kits King, appreciate you. Kamal, appreciate you guys. Yeah, so I do trade TQQQ, and I'll trade SQQQ as well. Absolutely, Angela. 100%. Absolutely. So TQs are an ETF that tracks the Qs. So if the Qs go up, TQs go up. The Qs go down, TQs go down. So it's not an inverse ETF. It's just an ETF that tracks the Qs. SQs are the inverse ETF. So if the Qs go down, SQs go up, right? The Qs go up, SQs go down. I definitely trade TQs at times, but I just prefer SQQQ. Makes a little bit bigger moves. I just like the movement with SQs. I know TQs make some good moves as well, but I've just gotten really comfortable and pretty good with just looking at SQQQ long and short. All right, guys, so out of the gate, number one stock that we should be watching is going to be PIXY, right? Followed by NEXI. And Cole had a really nice alert there, guys. Watching NEXI for the break of the downtrend. Good stuff, Cole. I like it. Watch for the break of the downtrend right at the open, NEXI. You could also put a nice little uptrend on the stock as well. So keep this on watch above the uptrend. If we bounce off the uptrend and then proceed to break the downtrend, definitely get long up to 165. Good alert, Cole. Appreciate it. Good stuff. All right, guys, we are all set, ready to rock and roll in EXI. Looking for this to hold this uptrend, follow through, break above VWAP, break the downtrend, get a nice little spike to the upside. In EXI, definitely on high watch, guys. And then PIXY as well. All right, right now, NEXI, guys, is on high watch for a break of that VWAP and a break of this downtrend. You ever crack the uptrend, you can get out because you'll probably come back down to that 140. So if you crack this uptrend, you could stop out, or you could put stops below 140 if you can allow it to breathe that much. About 10 to 15 cents of breathing room. We have room to 165 and then up towards around 183 here on NEXI. There's ISEE over 1530, guys. So the break over 1530 is your long for the mid-candle breakout. Stops you're under $15 psychological support. Right now, we had our first target in that room to 1592 and then 16. I do expect to see a nice little break over 16 bucks now that we have some great volume and we're breaking above 1530 over 16. I see room to $17 today on ISEE. There's NEXI breaking the downtrend, breaking the VWAP. All right, so those are your top two right now at this point in time. ISEE, getting you that mid-candle breakout. If you missed it, you're not buying it right here. Just wait for it to pull back close to 1530 for your entry. If you missed the initial entry right out of the gate on ISEE. NEXI, again, as long as you hold this uptrend, you look pretty good for the break of this downtrend here, up to 165 and then up towards around 183. Then PIXY, we just don't have enough yet. Right, PIXY, I want to see it maybe pull back a little bit more. Nothing right now at this point in time. We're just sitting here grinding that VWAP. Just bouncing off that VWAP at this point in time. I want to see what the SPY and the Qs are doing here. PIXY is now halted to the upside. Got a nice little pop there on PIXY. Now it is currently halted to the upside at 26.34. This will be live at 9:38.54. About 5 minutes to go here. We got PIXY working its way on up. NEXI breaking and retesting the VWAP as well as that trend line. Again, 164 is going to be your target. If you guys want, stops under 145. That's going to be underneath this trend line and also underneath low a day on NEXI. That's a good place for the stop loss underneath that 145 low a day. And then, like I said, ISEE, kind of just waiting for the stock to pull back a little bit. Now, NEXI is definitely struggling here a little bit, guys. I have no trades on the day. Or you have my main broker up. I have Fidelity up. And looking to see if we get any kind of really good options opportunity. And I'd love to maybe take an options trade with you guys today. If we see a really nice opportunity, guys. I still want to be very patient on the Qs. I want to see it bounce back up to 298. We may not get it. And right now, it looks like it wants to come just right down to that 294.30. Same thing with the SPY. We may not get that pop on up for a really nice retest of 396.80. We may just see it come on down to that 392. But if we start to see a little bit more opportunity, a clearer picture of direction, and a really good setup, definitely want to take advantage of it, guys. So I'm going to sit back and be patient for now. We're only 6 minutes into the day. PIXY will be live at 9:38.54. Right, so 9:38.54 will be the resumption time here on PIXY. NEXI is just struggling. There goes ISEE for the mid-candle breakout over 1530. And that's exactly where volume started to move on in, was the second it popped over that 1530 level. Right up to that 1597. Again, breaking over 16, we have great potential to spike on up to $17 here. I want to watch PIXY when this one goes live at 9:38.54. So you're talking about 1:50 to go. So about 1 minute and 50 seconds to go until we're live here on PIXY. Yeah, it happened really quick. The only way you really get that trade is if you have a like a stop buy market to where you can, preset your buy order in above the current price, and when that price is hit, you'll be filled via market. That would be the only way to really being able to get that trade, unless you were watching it at 9:30. You're looking at the bid, the ask, boom, you're in, because it happened quick. Or you're just prepared and you're getting those orders built in pre-market, so when the market opens, you can get that fill. All right, we should be live here on PIXY if this is a 5-minute halt in about 40 seconds. All right, we should be live in 3, 2, 1. There's your gap up, PIXY, gapped up at 27. Halt level, 26.33. There's your halt level bounce. There's your rip. There's your halt strategy that worked out beautifully. Very nice. Came right down towards around 26.38. The stock was halted at 26.34. Nice halt strategy there on PIXY. Nice little $1.50 pop. You got to take those profits very quick into those moves, guys. You got resistance at 28. Again, those halt strategies, you have to take profits very, very quickly, right? 50 cents, $1. If it squeezes immediately into another halt, then you're good to go. But you're not sitting there being greedy holding, because we know that the halt strategy is the halt strategy. You get in, you get out, because typically it can dump on down. Taking profits quick, but if it does squeeze into another halt, you're good to go. So hopefully, guys, if you were taking the halt strategy on PIXY, you did the right thing. You locked in some profits pretty quickly there. Currently halted to the downside. NEXI is still trying to grind its way on up at this point in time. There's nothing here with AMLX. Not a lot going on with RVNC. ASAN is trying to get back above that trend line. So we're starting to kind of rebound a little bit here with ASAN. Definitely keep that one on watch still. Patiently waiting for the SPY and the Qs to see if we get that nice retest before grabbing those shorts. Right now, we're just kind of sitting sideways out of the gate. And then you got NUTX getting some great action. This stock was doing absolutely nothing here in pre-market, but NUTX is starting to get some great action to the upside here, team. All right, so just looking at NUTX, we have resistance at 379. If we ever break over 379, 380 on NUTX, you have great potential to 4 and then 430. If you guys are watching NUTX, you do have a lot of strong resistance right around that 380 level on NUTX. You break that level, you can see a nice spike to 4 and then 430. Perfect, perfect, perfect. I want to see that nice little retest right around that 396.81 level. So I'm going to go ahead and get some SPY puts ready here. You know, maybe like go with a low a day, 394. Try and grab it at 397. I'll risk $1 to make $3 here. So it would be looking at like maybe like a 394 puts. Right now they're $1.75 a piece. 30 delta. We could actually go with a 393 with that 30 delta. A 393 on the SPY. So we're looking at a 393. That's about 140. 393, right around 140. Yep. We're going to go with those 393s. Trade error. Why is there a trade error? Place. So I'm trying to get in right on that retest, but I hit the place button and it's not filling me for some reason, which is a little frustrating. Buy to open. Got the right one. 5. Time enforced day. Place. Wait. Okay. Yeah, there's it's not working here for some reason on Fidelity. That's being very odd. Let me shut it down and restart it. Just in case it actually got me in, I want to make sure that I don't actually have a position. It said I wasn't in, but I clicked the place button quite a few times, so I want to make sure that it didn't fill me and it's just not a technical platform glitch. So let me get logged back into Fidelity real quick and see what was going on. If I'm filled, I want to be able to have access to manage that trade. I was trying to grab that right off our 396.81, but it said trade error. Let's see if it filled me or not. Would have loved to be in that trade. Nice tight stops on it. Okay, no orders, no nothing. Okay, so not sure what happened there. But I feel like I'm a little late now. I tried pulling the trigger there. But, I mean, obviously the entry is at 396.81. It's already down 50 cents or half the delta. So I'm pretty sure those are probably up a little bit already. I mean, not terribly, but, I mean, they're still up about 10 cents from when I was trying to pull the trigger on the SPY. So I'll have to wait for it to set back up. I mean, it's already down 80 cents from the entry. That was the crack in the retest. I wanted to get in, obviously take profits quick, and then start scaling out. But right now at this point in time, there's no reason for me to get in at 396 when the entry was at 396.80 with a stop loss just slightly above 397. So I don't know why it said trade error, but I am not currently in, but I absolutely tried to pull the trigger there over my Fidelity account. If it sets back up, great. Maybe there was a reason I'm not in it, but that was a quick little trade to take half. I was going to try and get in with 10 contracts off that level, take half quick, stop at break even, and leave 5 contracts as a runner to see if we did follow through down to that 394. Yeah, IMRA getting some good action. It did regain that trend line. So back above 211. So right now at this point in time, I would say the best level of support here on IMRA will be back down at 211. All right, do you have anything with NUTX? Yep, you just broke 380. 380 is now support, guys. 380 support, $4 resistance. All right, so look for a pullback into that 380 level, right into that 9 EMA. As long as you hold above 380, 375 at the lowest, we can definitely see the follow through back up to 4. And then if we ever break 4, we have room to 430 here. They're on NUTX. So you got NUTX with some great action. PIXY has been halted several times to the downside. NEXI is taking its sweet time, but it's still holding above that trend line. So until it cracks the trend line, it's technically good to go to that 165. You start cracking the trend line, you'd want to get out. Again, IMRA, I'd like to see it back down around 211. So one thing I do want to say is if we break and retest 396.81, right? So if we break and retest 396.81, and then we proceed to break above yesterday's close, we could see the next leg up here towards around 400 on the spine. If we're looking at the Qs, up towards around that 299.50 to 300 if we do break and retest 298 and proceed to break over yesterday's close. But right now we're showing a lot of weakness there right at that 396.81. Yeah, we were looking at those 394s on the SPY. Those are already up a lot. 394 on the SPY. Those are at like, what, 140? Maybe we get one more opportunity. SPY, puts, 390, 393. Buy, quantity, boom, boom, place. So buy to open, right? So buy to open. Again, I haven't really traded options on Fidelity like that. So let me go in here. Can I right click and go create an opposite order? Yeah, cool. So right click the order box, create opposite order. That's going to be a sell to close 5. Fantastic. And I got the finger on the trigger just in case we break over 397. So if we do indeed continue to consolidate in this flag-like formation and break 397, that's a stop. But if we do end up cracking back below 396, that does confirm a nice little crack and retest of that 396.81. So the stops are nice and tight. You got about 50 cents of risk, give or take, if we do get held below. But it looks like it may want to break off this higher low and continue higher. And if that's the case, you get out of your puts, you wait for the break. If it comes back down and gives you a proper retest of 396.81 support, then you could flip long to 399 and then 400 here on the SPY. It does look like you have a little bit of this bull flag off the 9 EMA. That could push this up a little bit higher. So if we do indeed break 397, right, you don't want to be playing puts. You want to be getting out of those puts. Look for the retest of 396.81 and then look to play some calls on up to that 399 to 400 level. You just want to watch to see what it's going to do. It looks like it wants to break that 396.81. You came up to the penny. You dropped off pretty nice there, almost $1. So if you got in right to the penny, boom, you already locked in some great profits. If you had a runner, yeah, your runner is getting clipped right now at this point in time, but the initial position would have been really nice here for that quick little dollar drop within 2 minutes. So again, right now I'm on the, which ones? The 393 puts. The 393 puts right at this 396.80 level. And again, if we close above 397, it's a simple walk away. I got in right here. Then it starts to look like it wants to break and possibly continue higher. So right now, stops are still nice and tight with a close above 397. All right, the fill is at 138. The bid right now is at 126, 127. Right now, it definitely has that look like it wants to break higher on the SPY. So if we start to break higher, it's okay. You just get out of the puts and you flip into the long, especially if you get a break and retest over that, again, 396.81, right? So a nice, strong break over 396.81, not this choppiness, but a nice, strong break above that level. A nice, clean retest. Then we could see the balance in the follow-through up to 399 and then 400, okay? Right now, you see it kind of just sitting here chopping around that 396.81. Let's see what the decision is. It's a decision to break over 397. If so, exit your puts. Your stops are like really, really tight. Is it going to make a decision and reject off this level and dump? Well, if so, hey, those puts could definitely start paying here a little bit. But at that point in time, looked like a fantastic short right here. Definitely wanting to get in as well. And then it starts looking like a little bit of a flag. And then we already see, hey, it has potential to maybe start breaking out here. Keep those stops nice and tight. Right now, it looks like we're going to get that nice little push. It definitely looks like that, but I'm still going to honor my plan. Still going to honor that plan. Right now, we're not close to the risk yet on the trade, but I have my finger on the trigger, and we're getting ready to go ahead and stop out here. Yep, go ahead and click sell. Boom. The one thing that I'm not crazy about is we are breaking out, and we are moving up pretty nice, but we're not really seeing the increase in volume. Now, we're starting to see it a little bit here. All right, so we are starting to see that a little bit here, but we do have momentum tapering on off as we're moving higher as well. So that's something to be mindful of. Again, nice first short off that level. I tried to take that with 10 contracts. I was going to take it quick. Again, scalp half of those, take the other half. I would have been clipped, but it still would have been a nice profitable trade on that first attempt. I got in here. We were up slightly, then immediately just getting out of that trade very quickly for a tiny loss. All right, so we got our break over 396.80. Now we're starting to see our retest. So if this is our break and retest, and we hold this level and we start U-shaping here, we could definitely play those calls up towards around our 398.70 and then that 400 mark. And then our top target today to the long side would be 401.21 here over on the SPY. All right. So again, you guys know what the game plan is there over on the SPY. NUTX failed to hold that 380 level. DIXY still fading on off. NEXI looks like crap. IMRA slowly working its way back down for a 210, 211 retest. So that's definitely an area to keep on watch for the break in the retest, right around 211 here on IMRA. And then ISEE is getting very close to your $17 target for that mid-candle breakout, guys. So well done if you took ISEE off that mid-candle breakout. You're looking for a break and retest here on IMRA back down towards around 211, ideally. However, yeah, I would say a little bit lower, right? Right into the VWAP, right into the trend line. That's going to put you really, really close to that 211 area. That's going to be the best area to think about getting long on IMRA. You have good potential to 239 on IMRA. You got some good potential, decent potential to 239 on IMRA. All right, right now, NUTX, nothing. PXY, not a lot right now. NEXI, really choppy, guys. IMRA looks pretty good. Definitely keep IMRA on watch above that 211. As long as you hold the trend line, you guys are good to go. Ideally, you want to see it holding that VWAP as well. And then ISEE, you guys are still in this. Your target was 17 bucks off the mid-candle breakout. All right, so IMRA may be right there for your guys' trade, right off that 211-ish area. VWAP in the uptrend. As long as you hold above 211, ideally that VWAP in that trend line, you guys have great potential back up to high a day. And then 239 here on IMRA, guys. So right now, IMRA is definitely one of our top stocks to keep on watch at this point in time. There's IMRA right around that 213, right at VWAP, right at the trend line. That's the best area to be looking to get long on this. Or a quick little push. Maybe it's a quick little scalp. Boom, you just got about 5-cent pop off that trend line, off that VWAP. You could have scalped it very quickly for a quick 5 cents. Now you're holding the rest of your position with a stop below VWAP, stop below the trend line. And if we do follow through and continue higher, you still have a nice position on the table to capitalize on this additional 9 to 10 cent move to the upside that you can get. Then if we ever break that 929 level, you have room to if we ever break that 229 level, you have room to 239, guys. So good job if you took your entries right there off the trend line and right there off the VWAP. You're starting to see a nice little bounce in your direction. We're just going to look and see if PIXY can stay above that 1920 level of support. Maybe we get a nice little bounce at 1920 here on PIXY. So it's definitely worth watching PIXY at this point in time above 1920 to see if we get a nice little bounce. Do I look at the level 2? I do, but I don't put that much emphasis into it like I do with like small caps, right? Small cap penny stocks, I really look at the price action and the candles. With the SPY and the Qs, I just look at our levels, right? So I don't really feed too much into price action because price action sometimes with the SPY and the Qs can be just a little misleading. So again, I'm just looking at levels, right? Support, resistance, higher lows, higher highs, divergences, downtrends, uptrends. I'm really just looking at certain levels to base my trades off of. I don't really look so close at the level 2 in the time and sales when it comes to like price action with the SPY and the Qs necessarily. All right, so right now, I definitely want to watch IMRA. IMRA looks pretty good at this point in time. As long as we hold the VWAP and the trend line, you guys have great potential to the upside. right? Your first initial entry there at that 213 level, boom, you got a nice little 10-cent pop, 9-cent pop. It's coming right back down to this trend line, giving you a final chance to take this low risk, high reward opportunity with stops below 211, stops below the trend line, stops below VWAP, right? Nice tight stops. We get that bounce and we start to see that push. Boom, you got room to 229. You break 229 high a day. Your next target is 239. There on IMRA. Right, you're just watching PIXY down towards around 1921. Maybe get a nice little bounce at 1921 there on PIXY. IMRA is, again, fantastic trade, guys. First opportunity, quick scalp. You miss it, second opportunity, boom. You got another quick scalp, or you're going to simply hold on to this, and you're going to expect some follow-through back up to high a day and then 239. Nice low risk with nice reward here. Again, your risk is not that much. You're risking like 5 cents at most to potentially make 20 to 25 cents to the upside. That's a fantastic 4-to-1, 5-to-1 setup there on IMRA. All right, so you guys are still managing your IMRA position, cracking the VWAP, cracking the trend line. That's a sign to possibly start walking away from this. Had 2 back-to-back opportunities to lock in some quick profits here on IMRA. ISEE, you're literally 20 cents away from your $17 target there on ISEE. But again, team, as long as IMRA is holding this trend line, you guys are still good to go. The second you crack the trend line, you go from the bullish side to the bearish side. Traders start stopping out, shorts start entering, and then if you crack that VWAP, that's when things get really, really nasty. So you still got some great breathing room from your entry, right? Your entry could have been down here at 213, 214. Could have been right here around 217. So you still have just a little bit of breathing room, and you could play this nice and tight, nice and safe. Simply put a stop loss below that trend line. Now you're below the trend line. Boom. That's an opportunity to walk away if you guys want to walk away. Right? If you're like, yep, below the trend line, had potential, not getting it, boom, you're out. Right? Taking some quick profits. Now your runner is getting stopped. But that's what we said this morning. You get a trade, lock in profits quick, go risk-free. Because you're not really seeing follow-through. And if you would have done that on IMRA, boom, quick profits, risk-free, never stopped out, boom, quick profits, risk-free. Now you get stopped out on your runner, but you're putting yourself in position to lock in those quick profits because we're not really seeing that fantastic follow-through in this market. If you guys missed the mid-candle breakout on ISEE and you guys were kind of sitting back like, all right, well, mid-candle breakout, maybe a short. Well, the one thing you are seeing is, number one, you're coming right into that $17 level of resistance, and $17 is a pretty tough level of resistance here on ISEE. The other thing, too, is momentum is really dying on off as the stock is grinding on up. So you see just momentum rolling on over, fading and falling, dying on off. Stock still moving on up into that level of resistance. That's a good indication that we could see a reversal off that $17 level of resistance here on ISEE. Right? So if you missed the long for the mid-candle breakout, that's okay. The stock is easy to borrow. It's easy to short. Off 17 bucks with this divergence, that's a good indication that we could start to see a bit of a reversal here on ISEE back down towards around that $16 level of support. So here's what I'm looking at on the SPY. So if we're still looking at the SPY at this point in time, we got a nice little intraday uptrend, put in this nice little low, nice push into our downtrend from pre-market. We got rejected back below that 396.80. Now we bounced off VWAP back above 396.80. So we got a nice little break back above. Now if we can stay above 396.81 and we can start to break this downtrend, we have great potential back up to 398.70, 399.50 to 400, and then that 401.20 target today here on the SPY. If we can stay above now, 396.81, bounce off this level, and then break this downtrend, boom, we got some great calls to the upside. However, if we can't hold above this 396.81, and this is going to be a series of lower highs, if we ever put in our lower low below VWAP, we could definitely start to see this thing come back down to low of day, right? So really, what's going to dictate your trade, it's still at this point in time, is that 396.81 level, right? As well as that downtrend. So if we can trade above 396.81 and break the downtrend, boom, that's a great long opportunity here on the SPY. But if we can't stay above and trade above this 396.81, that means we're probably not going to see that break of the downtrend, which means that, boom, we could see sellers take control, bring this down below VWAP, and start working our way back down to low of day. And you start to get a little bit of that head and shoulders formation as well, right? A little bit of that left shoulder, a little bit of this head, a little bit of this right shoulder, right around that 396.81. So you're starting to see a little bit of this intraday reversal formation here on the SPY. And then throw a trend line here on this bad boy as well. Right? So, if, again, crack the trend line, crack the VWAP. Boom, you got room down to low of day 394. If you can hold the VWAP, hold the trend line, ideally get above that 396.80 and actually show strength above that level, and we're trading above that level, we definitely have great odds and great potential to break our downtrend for that nice little run up. You got about 2.5 points to the upside here out of the SPY today. Is SHPH moving again? Yeah, SHPH is getting some nice action. Currently halted to the upside. Right there at that 43.80 level. With SHPH, if we break 43.80, so obviously if we get a nice gap up out of the halt and we stay above the halt level of 43.80, we need to see a squeeze above 45.89. But if we get that squeeze above 45.89, you got great potential to 50 and then 52 here on SHPH. But right now, we got some great opportunity here with the SPY guys, right? We see it's trying to get above 396.81, and that still could happen here on the SPY, right? And we could definitely see that regain of that 396.81. It hold a support, break the downturn, we got calls. But the longer we stay below 396.81, the higher probability chance we have of that trend line crack off these lower highs, back down the VWAP. You crack the VWAP, back down the low a day. Let's see what the SPY is going to do. A little bit of that head and shoulders formation, lower high, crack of the trend line. Even if it cracks this trend line off our lower high, we still have to be mindful that the VWAP could hold on up. If we crack down, come back to VWAP, and we have a strong bounce, we could still see the markets move higher. I really want to see a clean drop below VWAP to feel confident the markets can continue to sell on off, right? So if we come down and we show some buying pressure and we see that the market's bouncing, potentially a higher low off the VWAP, we could rebound, break the downtrend, and go higher, okay? I really want to see this thing drop off with ease below VWAP, put in that lower low, stocks below the VWAP. That's a sign of bearishness, and that's definitely a sign that we want to definitely keep those puts or look to short this down the low a day. But if this is a higher low off VWAP, that could definitely send the stock flying for a break of this downtrend. So again, you got a potential little halt strategy here on SHPH, right? Nice little gap up here on SHPH. Come back down to that 43.80. Grab your entries. You have great room to 50 and then 52 here on SHPH. There's some pretty good potential here with SHPH, guys. I want to see how the SPY plays out. We do have some good opportunity here on the SPY. I want to see how the SPY is going to play on out today. We start again cracking this trend line below 396.81. That's a great short opportunity for the drop below the VWAP and that drop below 395.76. And we could see this on down to 394, right? So you go find yourself a 30 delta. You'd be looking at a 393 contract. If you were to get in right here, and if you were to risk $1, which is over that prior high, you're risking $30 per contract, right? Because that's your delta. You'd be risking $30 a contract. But if we drop on off from 396.81 all the way down to low a day, let's even just say it's 394.81, that's a $2 drop. That means you're going to make $60 per contract because the delta is a 30. So for every contract you buy here, for every 393 put contract you buy here on the SPY, your risk over high a day, okay, you're going to lose roughly $30 per contract if you stop out over high a day. If you hit low a day target and you start selling, you're going to be right around $60 of profit per contract. SHPH with a massive gap down. Massive old gap down towards around $40. Support right now is 36.29. You do have 36.29 support right now at this point in time here on SHPH. Again, 36.29 support. You definitely have some movement, right? You got GCT that was moving. Now it's getting halted to the downside, it looks like. Looks like it's getting pinned on the ask to the downside. SHPH, massive drop on off. Supports at 36.29. PIXY is trying to bounce at 19.21. SPY's a bit choppy right now, guys. SPY's a bit choppy, cracking the trend line, pushing on back up, cracking the trend line, pushing on back up. Definitely looks like it wants to make that move higher here over on the SPY. So right now, if you were in those put contracts, that was a little bit of a false crack on down. You're just getting out really, really quickly there. It looks like it wants to move higher. So GTC, GCT's all over the place. SHPH all over the place. You're just going to watch it above 36.29. You got PIXY, 1921 support here. So if you guys want to take a trade, you're trading that at that 1921 support level for a dip buy, for a bounce. Stops are going to be below 19 bucks. You guys would have been making your entries at that 1921 if you were sitting back waiting for PIXY to dump to that level. It dumped right to that 1921, and it bounced on up about 50 cents there for a nice little dip buy. ISE hit your target at 17. Yeah. Like you said, yeah, GCT is just all over the place. This is a really challenging stock to be looking to get involved with. There's like literally no volume on the stock whatsoever. I mean, there's a little bit, but it came out of nowhere. And then it's just kind of fading on off. If you guys are on GCT, you got 2133 support with 2318 resistance on GCT. If you guys are looking at SHPH, understand it's a really risky play. You have some support back down around that 3629 level with top resistance at 4380 at this point in time. PIXY, again, maybe we get a nice reversal here off 1921. If we crack below 1921, we're going to drop even lower. But you did just get a nice little dip buy opportunity there on PIXY. So if you guys took that, good job. ISEE, the mid-candle breakout's already done. Now we're going to start possibly looking for a short. If we start to see a reversal off the $17 level, definitely looking for a short back down towards around 16 bucks today on ISEE. However, if we do still have some strength here with ISEE and we do break that $17 mark, we have potential to like 1930. So anything could happen. I'm definitely looking for a potential short here off $17 resistance on ISEE. But at the same time, if we break and retest and we hold above 17 bucks, we could see this thing continue to squeeze up towards around 1928. If we ever see a crack of this uptrend on the Qs, I'll look for a short. If we ever crack this uptrend on the SPY, I'll also look for a quick little short. As long as we hold the trend line, you want to play it long on the SPY. As long as you hold this trend line on the Qs, you absolutely want to play it long as well. Let's go ahead and just go through our top gainer list and make sure we're not missing anything at this point in time. Do we have anything with BNTC? BNTC was halted. Very, very light volume spike. I mean, it's not terribly light volume. You know, it's 2.9 million shares, but here earlier on, it was trading less than 100,000. Quick spike, a couple of halts, right up to that $1 level. I don't see any news here on BNTC. I don't see any filings here on BNTC either. The only thing that I see is a new 52-week low, and then we're just bouncing off that new 52-week low. So a little bit of that dead cat bounce. These are very short-lived, just so you guys know. The 52-week low dead cat bounce, they're very, very short-lived. You get the bounce, and then they start to fade on back off a little bit. So I'm not really seeing too much at this point in time with BNTC. I believe it's already made that move. If you guys are looking at RUBY is having a pretty decent day. Nice, strong day. And RUBY was a mover on Friday. So I had a nice little move Friday, gap up on Tuesday, Wednesday, dump on off. But again, a nice decreasing volume pullback. And we're just starting to get some action today. And we are breaking above Tuesday's high a day at 125. So right now, team, if you see the stock stay above 125, 124 actually, 124 on RUBY, you have potential to 155, right? If you come cracking below 120, you'll walk away. But right now, as long as you stay above 120, but ideally, right? Ideally, that 124, that was going to be Tuesday's high a day. RUBY still has potential to get that next leg up towards around 155. You got RUBY, just a nice little reversal here on the daily. Nice push on up, nice healthy pullback. Starting to see a nice little reversal at this point in time here on RUBY. ASAN's not doing too much. ATXI, nothing going on here. And UTX has really lost a lot of that volume and a lot of the attention. Right, so I mean, we're all set here, guys. We know exactly what to look at, right? We know GCT is a little all over the place, SHPH, some quick action, and now it literally lost everything. PIXY with a really nice solid bounce off 1921. That was a level that I wanted to see it come back down to for a bounce, and it came down and bounced beautifully. Over $1, almost $2 to the upside within 5 minutes off that really nice 1921 support level. You guys grab some of that. Good job. For those of you that were waiting for a short on ISCE around that $17 level, you guys are already starting to get paid there a little bit. And right now we're just kind of sitting back looking to see where the SPY and the Qs want to go next. But I still see your top small cap stocks at this point in time being PIXY. See if we can get some follow through off that 1920 level. And then ISEE, wait for a bounce. Look to see if it's a lower high. So if you get your bounce on up and you start to see that lower high, right, definitely look to short that lower high for the next leg down. It already made its move on up today from $15.30 to $17. Those were our targets for the mid-candle breakout. Again, wait for a little bit of a short-term bounce. Wait to see if it's a lower high. And if it starts to roll on back over, you can look to short that for your next leg on down. So if anybody has any questions, please let me know, right? ISEE, again, was a great mid-candle breakout. Again, another really good short there. Off that $17 resistance level if you guys pulled the trigger. PIXY, we just discussed it. Other than that, some quick spikes on up with some of these other stocks, but literally no follow-through. The only other stock that's actually getting some decent action to the upside right now is RUBY, and we know RUBY has room to 155. Looks like IMRA is moving back up now at this point in time. It's starting to hit that high today momentum scanner. So IMRA down to 211. Big time squeeze on up. And you're getting really close to 239. All right, guys, does anybody have any questions right now at this point in time? All right, IMRA, yep, nice break of the downtrend off 211, running up to that 239. All right, where's going to be, where's your support level at right now at this point in time? 227. Good job, Johnny. 4 for 4 on the day, hit your goal, $50. Very nice, good job. Light support, 227 on IMRA. All right, so light support at 227 on IMRA. You crack below 227, you're going to come back down to 211. Right now, top resistance, 239. A break over 239. Your next level is 258. RUBY supports at 124. Top resistance, 155. PIXY, not only was that a nice dip buy, now we're starting to see a pretty decent reversal here on PIXY. Again, bottom support, 1920. You ever start cracking below 1920? Here on PIXY, the thing's dead, but as long as you hold on up now, ideally above $20, right? Came down to 1920. Nice bounce back above 20. Nice pullback into $20 support. We could definitely see a higher low push off 20 back up to this VWAP of 2257. And then ISEE, all you're trying to do right now, if you did miss the mid-candle breakout long and you did not get short at that $17 resistance, you're just looking for the stock to bounce on up a little bit. Start to roll on over. Show you a lower high for the drop on back down to that $15.92, $16 support level. You ever start cracking back below $15.92, that's another great short opportunity down to that $15.30. All right. So right now, the reason I'm asking if you guys have any questions, comments, concerns, because I am going to step back for today. All right. I understand that may cause a little bit of maybe frustration or some maybe newer members are like, what the heck's going on? I just joined today, this week. Again, when I'm not focused, I'm out of it. Sometimes the best thing to do is step back. I'm more than happy to extend memberships out to make up for today. But I honestly think me being here in the market and not getting that full disconnect with everything I have going on behind the scenes, I think it does more damage than good. So I'd rather take a step back, get my mind right, try and figure out everything that I need to figure out in my personal life. You know, I'm human. I deal with personal things, guys. And again, you guys can hold it down. I just think today is a great day for me to take a step back. I understand that you may not be happy about that decision, but I think that's the best decision that I need to make for my own self and for the team as well right now at this point in time. And I'm more than happy to take care of you guys to make sure you're not missing out on anything. I'll extend your memberships by a couple of days. Shoot, I'll extend it by an extra week. Again, I'm not here to take anything from you. I'm here to make sure that you guys get the best of the best. And today, I'm not the best version of myself. I have way too many things going on in the back of my mind, and it's really clouding me out, guys. And I think I need to take a step back, and I think that's the best decision for myself and for the team at this point in time. All right. So again, if you have any questions, let me know. But if not, I'm going to take a step back today. If you guys have any questions, you want me to extend that, membership on out, I'm more than happy to. Send me an email, members@alphadaytrading.com. We'll go ahead and reach out to our support department and have them go ahead and start making those changes for you guys. We'll come back ready to rock and roll. Like, I'm like really eager to share it with you guys, but it's definitely not something I think it's the right time to do so. So I just want to make sure I got everything together on my end first, and you guys will find out eventually anyway. So it's nothing with ADT, guys, nothing with ADT, but it does impact me and my thought process and a lot of stuff like that. So eventually you're gonna know, but it's just so many things all at once that are just really overwhelming me, and I just need to get some preparation behind them. You know what I mean? Yeah, I'm not tired. I feel great. Just completely blacked out with everything. So, it is what it is, guys, right? I just need to get my mind right and come back strong. It has nothing to do with trading. Trading's been going great. The market's been fantastic. It's just a lot of personal things. So, I want you guys to understand that it has nothing to do with the markets or chat or anything that has to do with ADT. It is just some personal things that I'm dealing with right now at this point in time. And again, this rarely happens either. So if you are brand new to the chat and this is like your first day, first couple of days, first week, again, this rarely happens. The only time you see me taking a step back for the day is if I don't feel good. Last Thursday, I had a massive head cold. I didn't feel good. I took a step back. it's very, very rare that I take any steps back. I barely take vacations. I never have, weeks or 2 weeks of I'm not here because I'm going to go take a really nice trip. That never happens. I'm always showing up on time, dedicated. I'm here to help you guys out, and I love being here. So again, as a newcomer that signed up today or yesterday, you're like, man, I'm a day or two in. The guy's already leaving at 10:30. This rarely happens. Out of the 300 and some odd days a year, maybe 5 days out of the year, it happens. And normally it's because I don't feel the best. I feel sick. I need to go take a nap and be a baby, right? I got the man flu. Okay, we all know what the man flu is. We get it every now and then. And when we get it, we milk the crap out of it, all right? So maybe like 5 times a year that happens, but this is not something to expect. This is definitely not common. This is not normal. But like I said, I will absolutely extend that membership out. I'll make it right. We'll make sure that everybody's happy and taken care of, and we'll come back stronger than ever, and we'll continue to make it happen, guys. I want to be here. I'm going to lock in some profits with you guys. I mean, hey, I love trading, and I love locking in profits, and today's just one of those days that I'm not willing to risk my capital and put it on the line when I'm just not focused in the market. So I just want to go ahead and set those expectations with you guys before we jump off here. Yeah, and I appreciate your guys' support. I appreciate your guys' understanding, your support. Like I said, it's very vague. There's not a lot of detail I'm sharing right now. It's just not the right time to share, a lot of those details. But eventually, I will let you guys know, kind of what's going on and everything like that. It has nothing to do with ADT. It's a personal thing, personal things. But I always like to be honest, transparent with you guys and whatnot. So, but yeah, right now, I appreciate you guys. I appreciate your understanding, all that good stuff. And like I said, if you have any questions, please let me know. If you have a question, you need help, I'm here. Right? But if there's no questions and everybody's taking a step back anyway, I know you guys can hold it down. We have great leaders inside of chat. But like I said, if you need help and you need a question answered, I'm here right now. And I will absolutely stick around and make that happen because your success is my number one priority. So again, do not hesitate if you have any questions, guys. Yep. Yeah, self-care is a must. Take the day, get your head right, and come back better tomorrow. Yeah, it's a lot. 2022 has been a year, I tell you what. And it's like, usually it's like, what's the saying? Like a lot of little things that add up, right? You bottle up a lot of little things, they add up, and then top of the bottle blows up. Yeah, it's not even like little things. It's just like big life-changing things. Like 5 huge life-changing things just land on my plate within the last 3 days. I'm like, okay, I got this. I'm strong. I can handle it. Yeah, whew. Crazy stuff, guys. I tell you what. But anyway, I'm done talking. You know me. I talk way too much sometimes. Questions, let me know, guys. All right, I want to make sure that I don't walk away right when there's a question. Okay, I want to make sure that I get those answered if we have any. Make sure we're not missing those opportunities. Make sure you guys are all set. All right, if you guys are all set, we're ready to rock. Enjoy the rest of your day, guys. I'll see you back here tomorrow. I'm going to reach out to a few fellow traders and see if we can get them inside a chat. And maybe they can jump on a stream and hold it down for you guys and get some activity going. But real quick, IMRA is still on watch. All right, you're still going to be watching IMRA at this point in time. What I would go ahead and do here is I'd run a trend line off this low and connect this higher low and just run it on out to the right. So as long as you hold this trend line, you're good to go, guys. Come back down to the trend line, right around VWAP. You can definitely see this up at 239 today. So IMRA, as long as you hold that trend line, you're still all set, ready to rock, okay? RUBY, as long as you stay above that 124 level, you do have some nice potential up to 150 and then 155. So RUBY is still going to be on watch for today. PIXY, like we just discussed, we got that 1921 bounce. Back above $20. As long as you hold 20 bucks here, this could be your higher low push back up to 22.50 on PIXY. Stops would be under that 1920 level. You're expecting a higher low push back up to 22.50. ISEE, mid candle breakout, great opportunity. $17 target for the mid candle, great opportunity to flip short, and it dumped on off. If you missed the long and you missed the short, it's okay. Wait for a slight bounce on back up into a level of resistance. Wait to see it forming a lower high. And if it ever starts to look like it's rolling on over, definitely look to short this back down towards around $16 over on ISEE. AVYA, if you guys are wondering, is this still intact for the swing trade at this point in time? I think so. Just a little bit of that push-pull action. Push on up, pull back. Push on up, pull back. The pullbacks are pretty healthy, right? Nice push, healthy pullback. Nice little pop, healthy pullback so far on decreased volume into that 165 level of prior resistance, new support. So I still think there could be some potential with AVYA. As long as we don't fall and crack below 165 and we still see this nice, healthy, decreasing volume pullback, that could allow buyers to come back in off that support level, retake control, and push the stock back up towards 231 and then that target of 265. So right now, as long as you're not below 165, the swing trade still could play on out, and you could still see some action to the upside here on AVYA. But at any point in time, you're below that 50 SMA, you start cracking that 20 EMA, and you're below 165, you're out, you're out, you're out. Again, our cost basis, our entries were right down here in the 130s, in the 140s. You got 3 reasons, right? 3 separate levels to put your stops under, right? You got that 165 prior resistance, new support. You got your 50 SMA at 159. You got your 20 EMA at 149. Your cost basis was right there in the 145s. It's a perfect time to go risk-free. We're taking profits along the move up. Now you can safely go risk-free, and at this point in time, that still shows potential to still see some action to the upside as long as we hold 165. Nice, healthy, decreasing volume pullback. Then we could see a nice little bounce, see buyers start moving back in, and see that next leg up, guys, on AVYA. Still intact as long as we're above 165. Again, you put your stop loss underneath all of those indicators, the 50 SMA, the 20 EMA, and that level of support. That puts you right around your cost basis. You're officially safe. You're risk-free on this trade, which is fantastic, and that's the best place for your stop loss as well. All right, so you guys are all set, ready to rock and roll. Again, I do apologize. I never like coming in and starting my day. Lack of focus, distractions, a lot of things that I'm dealing with personally that does impact our day inside a chat. Like I said, it's very rare. It never happens, but when it does, it's best for me to take a step back, and that's the decision I'm making today. If you guys have any questions, again, please email. Don't hesitate. I'm more than happy to go ahead and extend your memberships. I will make it right, and we'll make sure you guys are taken care of. All right, guys. So again, I appreciate your understanding. I appreciate each and every one of you guys' support. Enjoy the rest of your day. I believe in you guys. You're absolutely going to hold it down. You're absolutely going to crush it. You guys got some great traders and some great leaders here inside of chat. So again, if you have questions, don't hesitate to ask. I'm sure they'll help you guys out. If you need me directly, send me that email, members@alphadaytrading.com. And I'll definitely see you guys back here tomorrow morning. Go ahead and get you guys prepared. We'll make it happen in this week on a strong and profitable note. And overall, what a great week this week, team. You guys have been absolutely on fire. You guys have been crushing it. So keep doing what you guys have been doing. Keep locking in those amazing profits. Keep trading the way you've been trading. You guys are on fire. Well done. Good job, traders. All right, enjoy the rest of your Thursday. All right, take care. Be safe. I'll see you back here tomorrow morning, guys. All right, hey. Just because I don't feel the greatest today, just because I got a lot going on, doesn't mean we're not going to end it with that energy, ladies and gentlemen. So I'm going to go ahead and end it with a big old 3, 2, 1. Woo! Enjoy the rest of your Thursday, guys. Once again, thank you guys so much for your support. I appreciate each and every one of you. I'll see you guys back here tomorrow morning. Take care, guys.